does it leave Europe? Where does it leave China? Where does it leave Japan? Where does it leave EM?
Okay, you want me to answer all those?
Please.
So I think if I were going pecking order here, I think it would go to the U.S. So out of our 10% overweight, 80% of that is in the U.S. And then the other piece, John, we have a small piece in emerging markets. So, you know, in 2016, if you listen to anything President Trump said on the campaign trail, you wouldn't have touched EM with a 10-foot pole. In 2017, EM was up 38% because of the coordinated global growth theme. So the fundamentals kind of went out there. I'm not saying that's going to happen this time, but, you know, we do have an environment where at least China is acknowledging their property market. It's fallen flat again, but it is somewhere where we just want to be careful of being too underweight. And then the Japan story, it just gets a little complicated with the Bank of Japan normalizing rates and what that does to dollar yen. I think it makes it a little bit easier if the Fed's not going as much, that the Bank of Japan can start to normalize, and it won't be like that early August trade. So in terms of pecking order, I think it would go US, EM, Japan, and then Europe would be a funding source at this point. They're growing at 1, we're growing at 3, European Central Bank is cutting, and we only have 75 basis points of easing priced out to the end of next year. Okay, and that's kind of a weaker euro story, which isn't great for investors here in the U.S.
Phil, you sound so bullish. What's the risk of Donald Trump putting on tariffs that are blanket, 60% on Chinese imports and 10% from everywhere else?
Yeah, so Emery, I go back to 2019. President Trump lost the majority in the midterm elections of 2018, and growth that year was 3, and inflation was 2, and the Fed was cutting. And I just don't know if these tariffs are going to lead to the inflation. I think it could be more of a growth side. But policy error, Anne-Marie, probably is our biggest risk, whether it be from the administration or whether it be from the Federal Reserve. And I think the Federal Reserve kind of got the message. They thought the unemployment rate was going to be 4.4 at the end of this year. It's 4.1. But to your point, policy error is probably the biggest risk. It's not the left tail. It's not recession. It's policy error from either the administration or the Fed.
Then what would be the catalyst for that 15% recession call possibility you have, which I know is low, but what would be the catalyst?
It would be business caution and then kind of layoff. So we're watching initial jobless claims really closely. So do claims or the labor market show signs of cracking? There was like this hoodwink earlier this year that the Fed fell for, and Claudia Sahm was like, no, it's not happening. So I think at the end of the day, it would have to come from the labor market, Anne-Marie, and then the uncertainty, as you said, on tariffs, on growth. And then that's the business caution, and it kind of goes the other way. Not priced in right now.
Claudia turned out to be right, at least so far. Jobless claims yesterday, 217. Phil, it's wonderful to catch up with you.
Thank you.
To get an update on your thoughts. Thank you, sir. Phil Camporelli there of JP Morgan. Equities are a little bit softer on the morning so far, with an update on stories elsewhere. Let's catch up with Yahara Hakes for your Bloomberg Brief.
Hi, John. Shares of Rivian and General Motors are falling while Tesla is recovering in the pre-market. This after Reuters reported President-elect Donald Trump plans to kill the $7,500 EV tax credit. The move would deal a major blow to EV adoption in the U.S., which has already weakened due to still high prices and the lack of charging infrastructure. Trump has previously said he would reverse President Joe Biden's EV policies on day 1 of his presidency. Meanwhile, Disney predicting $1 billion in operating earnings from streaming for the fiscal year, and it has plans to increase profit margins through price increases, higher ad sales, and a password sharing crackdown. Profit from Disney's direct-to-consumer division surpassed earnings compared to its film division in the last quarter. And get ready to rumble. 58-year-old Mike Tyson will face 27-year-old Jake Paul in the ring at AT&T Stadium in Arlington, Texas tonight. The two completed a weigh-in yesterday with Tyson slapping Paul in the face. Tyson is considered to be one of the greatest heavyweight boxers of all time, of course, while Paul has successfully faced off against different opponents, with his only loss coming from boxer Tommy Fury last year. The event will be streamed live on Netflix. That's your Bloomberg Brief. John?
Yahara, thank you. Boxing is just dead to me. It's like merging with WWE over the last few years. It's so sad.
Isn't it always been like entertainment and flash and, you know, has it ever been a real sport?
There used to be a raw realness to it about where these people had come from and their hard lives and the effort and the discipline they generated over time to ultimately go onto the world's biggest stage. But what it is now is just pure, raw entertainment. I don't even know what it is. How many rounds are they fighting? I don't even know.
I refuse to know. I refuse to know anything about this, John. I'm just going to tune out.
We'll leave that there. I don't think anyone around this table will be watching. Up next on the program, installing the Trump team.
All options are on the table, including recess appointments. Hopefully it doesn't get to that, but we'll find out fairly quickly whether the Democrats want to play ball or not.
That conversation up next, live from New York City. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda on it, only on Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Equity futures on the S&P positive here by 0.5%. Just a little bit of stability in the bond market. The 10-year, 443.74. Under surveillance this morning, installing the Trump team.
The president got a big mandate. The American people want change in this country. He wants to get a team in place that can do that, and we're going to work with him to see that he gets his team installed as quickly as possible so he can implement his agenda. All options are on the table, including recess appointments. Hopefully it doesn't get to that, but we'll find out fairly quickly whether the Democrats want to play ball or not.
So here's the latest. President-elect Donald Trump moving quickly to assemble his cabinet as many expect Republicans to hit the ground running next year. Isaac Boltanski of BTIG writing, our view is that lawmakers will move quickly to shape a tax spending package, and our channel checks suggest that they are targeting March, April for votes. Isaac joins us now for more. Isaac, that's a really aggressive timetable, and you put a number on things as well in your latest note. Our initial read of the landscape is that there will be at least $7 trillion in new spending over a decade, with no real clarity on the amount that will be offset. Isaac, what goes into that 7 number? What's behind $7 trillion?
Well, look, we're starting, John, with $5 trillion just to extend the Tax Cut and Jobs Act portions that are expiring at the end of next year, as well as some that have expired over the past few years. So we're starting at just about $5 trillion. Then you have to layer on some of the items that the president promised from the campaign trail or other issues or priorities for members of the Hill. And so I think 7.5 is a fair framing device. The unknown for all of us, and I can tell you what a lot of folks in D.C. right now are doing, is building out their pay-for list. And I think that's something that you're going to hear a lot of over the next few weeks in terms of, hey, can they use tariff revenue as a means of offsetting some of these costs? Where are they going to find other pay-fors? Is it the Department of Government Efficiency? Is it other areas of the government? We don't know. That's going to take some time, and ultimately it's going to take some process and some iterative back and forth with the CBO to figure out how much all of these things cost. But I'll tell you, the first shot across the bow was the comments from the president yesterday regarding electric vehicles, and that's a big pay for right there. That's a couple $100 billion right off the bat.
What else could we see? I mean, the fact that we are going to see this trifecta in Congress and the executive branch dial back something like the Inflation Reduction Act wasn't exactly shocking to me. They've been talking about it for months. What else could we see potentially get rid of that the Biden administration had put forward?
Sure, look, and I think that's a fair framing. We all knew that the Trump administration was going to go after the IRA. What we've tried to do, though, is try to look at cost of these provisions and then their political risk. And so, for example, within the Inflation Reduction Act, of course, electric vehicles were going to get scrutinized and lightly cut back. But other portions of that bill have broad bipartisan support. You know, things like hydrogen, the production tax credits, the ITC, those things have broad support and should see continued support and should survive this process. I'm looking at other areas, things that maybe haven't gotten as much focus. For example, graduate student lending. That's one area where you could see the government pull back. I also think that they're going to focus a fair amount on turning some of these dials. So we're not going to see a lot of these provisions extended for the full 10 years. Instead, what you're going to see is we'll have 2 or 3 years of clarity, and they'll push it out as far as they can in order to goal seek for that deficit reduction number that they're looking for.
Isaac, you have one of the most aggressive timelines I've heard anyone talk about when it comes to this package. March and April for votes. Are you assuming that we're going to sail through these cabinet appointments in the Senate so that they can move on to agenda items like this?
Well, look, my viewpoint on this is I think that they're going to start fast. And that's what I'm trying to get clients ready for. I think that you're going to have the initial movement in the House that early because they have a wafer-thin majority. And we've got to keep in mind with these House members, there's normal attrition, right? You see resignations, you see death, you see folks going to jail, right? These are normal happenings for the House of Representatives. And so I think that they're going to move quickly to try to capture some of the mandate that they clearly have received from the electorate, as well as to ensure that they have some movement while they have the majority and while they have cohesion around their goal. I think that it will still take time to get this through the Senate. I think there'll be back and forth. I think that this thing will die a dozen times before it's done. My point is, I just think they're going to start faster than they did previously, and we've got to get ready for those headlines to start flowing accordingly.
Well, we're still waiting for the headline on who he's going to pick to shepherd some of this through when it comes to things like spending, like the Treasury Secretary. Yesterday, we heard from Senator John Thune on Fox talking about the advice and consent role that Congress plays when it comes to these confirmation process of the president-elect's picks. Do you think that's how it will be? Will this be a process-driven approach, or do you think the Senate will bow down to DJT and basically say, we'll give you the recess?
I mean, look, I think that ultimately what we're seeing right now is a bit of the flooding of the zone with nominees. And from my seat, I find it incredibly difficult to believe that Senate Republicans are going to reject multiple controversial nominees from the president. I mean, it was wild to me, Anne-Marie, to speak to Democratic contacts last night who were saying maybe Mitch McConnell will come and save us. Maybe he will be the knight in shining armor. You know, if Democrats are waiting for Mitch McConnell to save them, I hope they brought a book because it's unclear to me that he's going to show up anytime soon. And so ultimately, the way I frame this with clients is I think that we'll have some failures on the nomination front. And Gates is a good example for Attorney General. That one is already troubled, and I would bet on that one to probably go down. But the rest of them, I think, are going to go forward. And this is something just yesterday we saw with RFK Jr., where I think that because of the focus and the ire being on so many of the other nominations, and because of the fact that there's going to be a bit of attrition here where they simply just don't want to reject every single nomination, plus you add in the risk of a recess appointment, and our base case is the vast majority of these nominees are going to get confirmed. And I think that's both arithmetic and politics.
So in your assumption, RFK Jr. is someone who is able to get confirmed. If we do see that, Isaac, you saw already pharma stocks reacting yesterday, specifically vaccine stocks. What sort of impact could an RFK Jr. at HHS actually have on the system?
You know, the one I'm watching right now is what does he do in terms of the staffing and the workforce there? I mean, what you've seen in D.C. circles is a lot of commentary about folks, for example, the FDA and other agencies under the purview of the HHS possibly leaving. And I think that's meaningful from a timeline perspective for approvals. That's one thing that I know clients already care about. I think there's some questions about his capacity to run a sprawling agency with $2 trillion in spending. I think that's a real concern for the market. Other items I think that we're going to have to digest and probably dismiss. You know, I don't think that he's going to ban direct-to-consumer pharma advertising, right? I think that's something he's talked about, but he's probably not going to do. There are a number of those items on his list that I don't think he will do. There are broader questions, of course, about his impact on public health. That's a bit outside of my purview. My focus is just on what the market impact is going to be. And I think that, once again, with him and with all of these nominees, we've got to remember that there is a divide between the rhetoric that we've heard and the reality once they actually get into the seats.
Right, and to your point, they're going to be facing huge bureaucratic institutions. If a lot of these picks, the aim is for them to come in, make cuts, make things more efficient, Isaac, how much of that will they actually be able to do, or will they be facing a different reality once they're appointed?
Look, we've got to keep in mind that the Trump administration is moving quickly, right? And I think that folks have been surprised that this is year 5 of Trump and not year 1. I mean, he's moving quickly on a number of fronts and showing some experience that we didn't see the first round. But even when you talk to Team Trump folks, they say they've got a good 18 months, right? They've got 18 months of runway to move quickly. So there's a prioritization hierarchy that's already happening in terms of what can get done before we all turn our focus to the midterms and we start looking at Trump as a lame duck. And so, look, there are going to be 1 or 2 items for each of these secretaries that they're going to be able to focus on from an administrative perspective, because in addition to that, they're also going to have to be out there selling the tax cuts and probably the tariffs. And so that's going to be a big part of their day job as well.
Isaac, 10 seconds. Give us a name. Who gets the Treasury seat?
I'm still in the Bessent camp. I think that ultimately he has the background from a geopolitical perspective. And of course, we know that he has what is most important to the president, which is he looks the part.
And he is the market favorite right now. Isaac, appreciate it, sir. Isaac Boltanski of BTIG. Isaac with a compliment at the end. I'm sure Scott would like that.
Well, I think the president-elect has called him, quote, central casting when it comes to Scott Bessent.
New op-ed out on Fox News from Scott Bessent this morning saying this about tariffs, that President-elect Donald Trump has added a 3rd leg to the stool. Tariffs are a negotiating tool with our trading partners. There's a reason why I think Scott has become a market favorite over the last few weeks.
Well, yes, because he could be someone who maybe he's going to embrace tariffs, but he's not going to be maybe as enthusiastic as, say, a Robert Lighthizer. Remember what I said the other day? It's the angel and the devil on your shoulder.
Yeah, Lighthizer would be market negative. Let's put it that way.
And that's not what Donald Trump would like.
Equity futures on the S&P 500 right now, negative by 0.5%. From New York City, you're watching Bloomberg TV.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Just off session lows in the equity market. On the S&P 500, we're negative by 0.5. The weight of the losses on the Nasdaq 100, we're down by 0.8. With 2 hours until the opening bell, here's your morning movers with Manus Cranny. Good morning, Manus.
Jonathan, a very good morning to you. Let's kick it off with Applied Materials. Your biggest customers are Intel, TSMC, and over 30% of your business is in China. You've got double walls of fear coming towards you here. The guidance, modest guidance. That's what's really irked the market. They're going to make 7 and 8 billion, plus or minus 400,000. Now, that really is what has taken this market lower this morning, this stock lower this morning. We think that the China business is normalizing. That's what they've said to us. But this is a slippage relative to the recent quarters. So just keep an eye on that. The headwinds are there. And then, of course, if you get more export controls, it's like doubling down on the negative. Roll it over and have a look at ground zero in China. Yes, you've got retail sales up the most in 8 months in China. That is the big backdrop. When it comes to Alibaba, it is just the sheer size of this company. It's gone through a massive, massive change about their dominant position. The sales were lighter than estimated, but Eddie Wu says we are in the most confident in our core business than we have ever been. And the core business is e-commerce and the cloud. And the cloud was up 7%, the strongest in 6 quarters. This is a recast Alibaba, fit for purpose at China in the late 2020s. I'll leave you with a slice of pizza for the weekend. This stock is up, Domino's. We understand that, and there's an important distinction here. Berkshire Hathaway has taken a slice, not necessarily Warren Buffett. This portion that they've taken is under $1 billion. Warren Buffett typically doesn't really get involved or play in anything less than $1 billion. So we think it is Ted Weschler and Todd Coombs who've taken a slice out of Domino's. There you go for a Friday.
You don't strike me as a Domino's kind of guy, Manus.
Yeah, I'm a Broadchurch.
Just saying. Manus used to say to us in London, no carbs before Marbs, right?
Yeah.
Do you remember that?
He's a no-carb guy.
Marbella, if anyone's following at home. Under surveillance this morning, shares of vaccine makers falling after Donald Trump taps Robert F. Kennedy Jr. to lead the Department of Health and Human Services. Trump saying the Kennedy, known as a vaccine skeptic, will help take on the health crisis in the country and make America great and healthy again.
So there's two visions when it comes to RFK. There's individuals who like what he has said about health, about the additives that we have in U.S. processed food. He's talked a lot about on the campaign trail things like Fruit Loops. A lot of moms really loved this. But then it comes to the vaccine skeptic issue that a lot of senators may have a problem with. Interesting, though, Isaac Botansky just said there he thinks he gets through. It's going to be contentious, but he thinks he gets through. Because why? The Senate can't say no to everyone Donald Trump puts in front of them. And the one that's most likely not going to get through is going to be AG Matt Gaetz.
But if he's likely to get through, this is why I find the market reaction kind of confusing. Okay, I understand the gut punch vaccine makers fall, but why not processed foods? I basically tried to look up every single processed food maker. Mondelez, General Mills, PepsiCo, Bayer makes chemicals. All of them gained yesterday. There seems to be a bit of an inconsistency to this market and how it's really reacting to him.
Well, maybe it could be because some of these companies like Kellogg's, and I looked up, they put things like BHT in American Fruit Loops, but they actually use, say, a beetroot extract to make Fruit Loops in Canada. Maybe they'll just start doing things like that in the United States.
Which ultimately is what you'd like to see.
But that would make it more expensive for these companies. Their margins get worse, and therefore, maybe, I don't know, they should be falling too.
The fight that he's going to have, can you imagine the pharma lobby and the food lobby simultaneously in Washington, D.C.? Be interested to see who gets USDA. because there's going to have to be a close partnership with those two if he wants to do the kind of things that he's talking about.
And we are talking about a massive institution, even bigger than the defense budget, $1.7 trillion, 80,000 employees. And it goes from things like Medicare to vaccines. I mean, he has a purview under him will be massive, which is why this is going to be very contentious. And remember, they can only lose 3 votes on the Republican side. So 50 senators have to say yay to this one.
Isaac Boltanski of BTIG said the president-elect was flooding the zone with nominations over the past few days. But there is this just like empty seat that we're all waiting to be filled. Economics was at the epicenter of the campaign. It was at the epicenter of the election. We need to see who's going to run NEC, National Economic Council, who will be the director. We need to work out who's going to be the Treasury Secretary. Have we had commerce yet? Either we need to work out all these things.
No, we haven't had the crux of what's going to be the economic team, which usually is what is so important to the former real estate developer turned president, Donald Trump. He cares about the economy. He campaigned about the economy. Well, where's your economic team? We should know Treasury soon. Today, we have Senator Lindsey Graham apparently pushing for fellow South Carolina Scott Bessent to be Donald Trump's next Treasury Secretary, according to the Wall Street Journal. This after there seemed to be some kerfuffle with Wall Street Journal also reporting that Howard Lutnick threw his name into the ring at the last moment. Remember, this is the person running the transition and then decided he wanted to step in and take one of the roles.
Yeah, that's a wrinkle in the transition that maybe the president-elect did not want to see. Watch this space over the weekend. Maybe we get some news. Elsewhere, the FTC preparing to launch an investigation into anti-competitive practices at Microsoft's cloud computing business. This, according to the Financial Times, the FTC examining allegations that Microsoft is abusing its market power by preventing customers from moving their data from its Azure cloud service to competing platforms. Danny, that stock is down about 0.5%.
And maybe the reason it's not down more is because, by all accounts, Lena Khan is not going to be staying on in a new Trump administration. It's this feeling of like maybe she's working on her legacy until the last day. It's a weird one because it's Microsoft in the cloud, which, by the way, they're not the leader in. And she's done this frequently. I just wonder, in a new Trump administration, will any of the, conservatives try to carry this through into a Trump administration?
Well, here's the question. Once we get Treasury Secretary, then who becomes FTC? Who gets the helm of SEC? These are a lot of questions that the market is waiting for, but you nailed it. This doesn't feel like actually it has a lot of legs to it. It feels like Lena Khan's trying to take one last bite out of the apple before she gets replaced.
Speaking of that, here's another bite out of the apple before this one gets replaced. U.S. Trade Representative Catherine Tai saying targeted tariffs are needed to guard against imports of goods from China, but cautioning against the use of blanket tariffs like those described by Donald Trump.
And she also talked about this idea of a China shock. She says we do not want to see a China shock. Basically, when China joined the WTO in 2011, it was basically all this devastation for a number of industries. So when she says things like that, though, what is the distance between Catherine Tai and Robert Lighthizer? They both seem like China hawks, but maybe in a Biden administration, a Catherine Tai was regulated by, say,
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I will never keep my ideas to myself again after learning this. Hi there, visionary entrepreneur. Do you have an innovative idea that's ready to revolutionize the world? Now's your chance to turn that vision into reality. We're offering you the unique opportunity to pitch your idea directly to investors who are eager to fund the next big thing. All you need to do is create a short video showcasing your concept, your passion, and your potential. Send us your video and we'll broadcast it on our media channel, reaching investors who are specifically looking for groundbreaking ideas like yours. Remember, it's crucial to include your contact details so investors can reach out to you directly. Don't let your brilliant idea gather dust. Seize this opportunity to get noticed, gain funding, and make your entrepreneurial dreams come true. Pitch your idea today and watch your future unfold. Click the link in the description to get started. Your big break is just one video away. Don't wait. Take action now.
Its customers benefit from this tax credit.
Well, Elon Musk posted on Twitter that the U.S. should end all government subsidies, including TVs, oil, gas. I guess he's okay, Tool, when it comes to the electric vehicle subsidies, that we could see this trifecta in Congress repeal. But Craig, the other side for Elon Musk is going to be tariffs. How difficult are those going to be for his business?
I think that's actually a potential positive for him. It's not going to be without some issues in the sense that Tesla does have a global supply chain, but they do have a significant presence in the U.S. market. They do try and insource a lot of components to some degree. Will it hurt? Potentially, but maybe not as much as, say if you're Mercedes or BMW, some of their competitors. GM and Ford, it's a sort of similar story in Stellantis, where these are all companies that, over decades have outsourced a fair amount of their supply chain. But I think, the emphasis on reshoring and legislation like the Inflation Reduction Act has really led to this rethinking of whether or not we should, be, relying so much on components from overseas. And to the pandemic, I think, really led to some rethinking in that on this front as well.
I remember when Joe Biden had the heads of GM and Ford at the White House to show off the EVs. If we do see this elimination of the tax credit, of the subsidies for electric vehicles, how much money do you think GM and Ford are really going to still put into this industry?
I think it's a great question. I mean, I would say that of the two of them, I think GM is much further along in its transition. They have not been without bumps in the road over the last few years of trying to stand up a battery joint venture with Korean partners. They really struggled to get that off the ground, but they've really made some headway in the past few months, I would say. And brought in actually a very prominent former Tesla executive to oversee that business. They have a lot of EVs now on the market and more coming next year. Ford, on the other hand, I think both of them have sort of pumped the brakes a little bit in terms of how many EVs they're bringing, how quickly. But Ford is much further behind in terms of, I think they tried to kind of steal a march on GM and rushed out the Mustang Mach-E and the Ford F-150 Lightning. But those have not sold particularly well, and that business has not performed well at all for Ford. So maybe this does lead them to sort of rethink whether or not they should go, even slower to kind of shore up the profitability for that business going forward.
Well, for the pure EVs, Craig, the market is clearly voting a certain way, that Tesla can survive this, but Rivian cannot. You can see it in the market reaction this morning, where Tesla is positive again. Can Rivian survive this? Can Rivian stay afloat? What do the economics become without an EV subsidy for them?
This company has had quite a week, because we did have a sort of formalization of their joint venture with Volkswagen, where VW a few months back announced they were going to invest up to $5 billion into the company. They upped that this week to $5.8 billion. So we saw a big jump in the stock earlier this week. We saw a huge drop yesterday, and I do think that the amount of money that this company is going through, it's even more excessive than what we saw out of Tesla a few years ago. We've seen that in Tesla's case, they were able to eventually overcome that. But what Rivian really needs to do is get to a point where it's making EVs in high enough volume that it really starts to see some benefit of cost. And perhaps this joint venture with Volkswagen is helpful in that regard. But I think that's also a partnership that's more so focused on software. So I don't know that they will necessarily see a huge boost from Volkswagen in terms of knowing how to put the trucks and SUVs together. That's really what's been sort of vexing them the last couple of years.
Well, it's this whole thing. Should the private market be the thing that carries these companies forward, or should it be government? Back in 2012, Craig, Mitt Romney criticized Obama for what he said was wasting money on a loser like Tesla. How should we look at that divide now as to whether the government should be taking risks on these EVs, or frankly, the industry has just moved forward and it's not time for that anymore?
I think that's such a great question. I do think that, you know, if you look at the U.S. as sort of like a venture capitalist investor, you know, they had a huge win in Tesla, right? And they bet on this company, you know, managed to really support it through some tough times. If anything, the only reason that Uncle Sam didn't make out better is the fact that Musk, I think, you know, was so sort of self-conscious about the extent to which he, you know, kind of had his bacon saved by the U.S. that he wanted to pay the loan off early to kind of, you know, do away with that criticism. We have, though, you know, we should note, had, you know, several misses in terms of EV companies that EV companies or battery companies that the U.S. Has supported that have gone out of business. And that's the nature, though, of sort of, you know, this style of venture capital-like investing. I do think that, you know, when we look at what has happened in China, you know, a huge reason for why we've seen so much success in that country is the level of support and the consistent level of support. We just haven't seen either, you know, the amount of backing from the federal government in the U.S., but more importantly, I would say, you know, the sort of waffling that we've seen from one administration to the next is not conducive to building a, you know, long-term healthy industry.
Hey, Craig, appreciate your input on the subject. Craig Rudell there of Bloomberg on the latest with the automakers. Tesla just about positive by a few tenths of 1% in early trading. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. Here's Yahara Hackers. Hey, Yahara.
Hi, John. Scott Bessent, a top candidate for Treasury Secretary in the Trump administration, is calling for a return to Alexander Hamilton's favorite tool. In a new op-ed for Fox News, he says the truth is that tariffs have a long and storied history as both a revenue-raising tool and a way of protecting strategically important industries in the U.S. Bessent goes on to say that Trump adds the benefit of being able to use tariffs as a negotiating tool and that they're a way to stand up for Americans. Meanwhile, hedge funds reduced their exposure to tech giants like Amazon and Apple in the third quarter. That's based on the latest 13F filings, which showed holdings of Amazon dropped by $11 billion in the quarter. And almost twice as many investors cut their stakes in Apple than added to them. While not a hedge fund, Berkshire Hathaway also reduced its position in Apple by 25%. This coming, of course, as fund managers move out of growth stocks and rotate into other sectors that would benefit from rate cuts. And social media platform Blue Sky gained about 2.5 million users in the past week as users leave X. Donald Trump's election win and a change to X's terms of service is pushing people away from Elon Musk's platform. The change in terms comes into effect today. It requires all legal disputes related to the platform to be brought exclusively in the U.S. District Court for the Northern District of Texas or state courts in Tarrant County, Texas. Of course, conservative leaning. That's your Bloomberg brief. John?
Yahara, thank you. Appreciate it. More from Yahara in about 30 minutes. I don't really understand the aversion to X at the moment. Just mute the words you don't like, follow the people you do like, and create your own sort of like little echo chamber if you really want to, and just use it that way.
Also, the interface of Blue Sky, I've tried it before. I'm like, you guys have had like 2 years to get this right, and you're not there yet.
It was also started by Jack Dorsey, who also started X, and then they parted ways. I think it's just because Elon Musk is so close to the former president.
That's it.
He has now, you know, proximity to power, and people say we got to go somewhere else.
Okay, all right. Do whatever you want. It's a free country. Up next on the program, you can't hurry cuts.
The economy is not sending any signals that we need to be in a hurry to lower rates. We're confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained with inflation moving sustainably down to 2%.
So you'll just have to wait. From New York City, this is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but I can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I didn't. Go.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Some breaking news for you in the last few moments. According to a person familiar with the matter, speaking to Bloomberg, Russian President Vladimir Putin and German Chancellor Olaf Scholz planning to hold a phone call later on today. Anne-Marie, the first direct communication potentially between the two leaders in almost 2 years.
That's right. He's been isolated, but from all these G7 leaders. What you see taking shape right now is this raw political power we have out of Mar-a-Lago. President-elect Donald Trump says he wants to end this war, and maybe that's why Scholz feels like he can get on the call with Putin.
One to watch this Friday, that's for sure. Under surveillance this morning, you can't hurry cuts.
The economy is not sending any signals that we need to be in a hurry to lower rates. The strength we're currently seeing in the economy gives us the ability to approach our decisions carefully. Ultimately, the path of the policy rate will depend on how the incoming data and the economic outlook evolve. We're confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%.
So here's the latest. Fed Chair Jay Powell saying the FOMC is in no rush to cut rates further, citing continuing U.S. economic strength. Powell's comments prompting traders to pull back expectations for a December reduction. Michael Kushner of Morgan Stanley writing the surge in yields post-Fed rate cut was unusual, but strength in data whipsaws the Fed once again. These are the challenges of being too data dependent when data is very noisy. December is getting more debatable. Michael joins us now for more. So Michael, base case, is this a pause or a cut?
I think they're going to cut, but it's going to be characterized as a not as a continuation to expect this continuously, but reflecting again the recalibration of monetary policy to a more appropriate level given the current position of the economy, but will not portend more rate cuts automatically next year.
Michael, something Anne-Marie and I have been talking about this morning is the politics, the optics of what it would look like if the Fed pauses in December right before a Donald Trump comes in. Do you think that's playing on the Fed's mind at all?
I don't think so. I think they are very, very data dependent. In fact, I think they've been whipsawed over the course of the last year and a half with data moving up, moving down. And we saw earlier this year in late spring, early summer, where they were getting nervous about maybe not cutting rates at all because inflation was kind of surging in the second quarter. Then, of course, when they took back some of the rate cuts they might expect to do, inflation turned around and went the other way and said, oh, no, we're going to do 3 rate cuts this year anyway. So I don't think that is a key factor in their decision at all. They're going to follow the data, and the data, as Chairman Powell talked about, is still pretty good overall. There's no reason to rush rate cuts. We can recalibrate it because inflation is substantially lower than it was when interest rates were higher.
Well, to be fair, the bond market recalibrated before he did, Michael. I mean, it's been this pendulum swing back and forth. Before, up to this moment, the market had been pricing in a substantial amount of cuts. We get strong data, we get an election. It pulls back. We're pricing in about 225 basis point cuts up to the summer of next year. Where do you make where this pendulum is? Are we in a good place? Is it going to swing one way? Have we swung too far? Where do we stand?
I think the economy is in a really good space, and it's moving around. Data moves around, but underlying, GDP growth, even employment growth, is back to reasonable levels. Everyone expects. The consensus expects a reasonably strong deceleration of growth next year. We haven't seen that over the last several years, but it's likely that the Fed does respond to a deceleration of the economy if it's meaningful in terms of raising the unemployment rate. But other than that, there's no reason to rush. There are no big imbalances. The household sector's in good shape. The corporate sector's in good shape. Data will bounce around all over the place, but 10-year bond yields haven't moved all that much. We were at this levels in, I think it was June 30th. We were basically at 4.3, 4.4%. We rallied in Q3, and now we're back up at the same level. We're only up like 40-some basis points over the course of the whole year. So long-term yields aren't moving around all that much, despite all this bouncing around in the economic data.
Well, we did have yields pushing higher on the 10-year, and that's because the market has been pricing in more policy changes out of Washington, D.C. Powell said yesterday we have to see the economic outlook evolve. So what policy risk are you potentially looking at for 2025?
Well, again, I think a lot of the Trump agenda cuts two ways, and tax cuts are good, but tariffs are bad for economic growth. I think back in 2017-18, when the tariffs were first being imposed, I think global PMI manufacturing has peaked just as tariffs were being imposed in the economy. Manufacturing sector decelerated a bit, and the Fed was talking about rate cuts not too long after that. So I think his whole agenda cuts multiple ways, and I think tariffs in many ways are ways to raise revenue to finance tax cuts on other things. The net balance of all these things, we're not sure. I'm more concerned about the labor market, that if there is a deceleration of labor supply in the economy, that will reduce the potential growth next year as well. So there's lots and lots of cross currents at work, which makes it more challenging to see, well, will there be a deceleration like the consensus thinks, or is the economy has such strong support from household income growth and CapEx spending that it'll be just fine, growing 2%. What's wrong with that?
Michael Kushner, appreciate your time, sir, and the input. Michael Kushner there of Morgan Stanley. I think you can construct an argument over the last few months that the Fed's easing bias has contributed to high yields at the long end. Might sound counterintuitive, but I think you can make that argument. And I just wonder, now we've chipped away at that easing bias, particularly just yesterday in the comments from Chairman Powell, whether that helps to stabilize the long end, just put a lid on things just for a moment. That's the latest on fixed income and on the Federal Reserve. Coming up in the next hour on Bloomberg Surveillance, we'll catch up with Ross Mayfield of Baird. We'll speak to Frank Lee of HSBC, Steve Rasciuto of Mizuho, and Rob Waldner of Invesco from New York City. This is Bloomberg.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I will never keep my ideas to myself again after learning this. Hi there, visionary entrepreneur. Do you have an innovative idea that's ready to revolutionize the world? Now's your chance to turn that vision into reality. We're offering you the unique opportunity to pitch your idea directly to investors who are eager to fund the next big thing. All you need to do is create a short video showcasing your concept, your passion, and your potential. Send us your video and we'll broadcast it on our media channel, reaching investors who are specifically looking for groundbreaking ideas like yours. Remember, it's It's crucial to include your contact details so investors can reach out to you directly. Don't let your brilliant idea gather dust. Seize this opportunity to get noticed, gain funding, and make your entrepreneurial dreams come true. Pitch your idea today and watch your future unfold. Click the link in the description to get started. Your big break is just one video away. Don't wait. Take action now.
We believe it's working. We think the tailwind's in our favor, and it's on us to continue to deliver.
Whenever you're doing something innovative that hasn't been done before, there's a lot of trial and error and iteration. It just always has these zigs and zags along the way, and I think where we've been successful is really being reactive.
Hollywood is the history of technology. Like, we are here because of a technological breakthrough, right? And so we sometimes forget that art and technology kind of like come together always. And for us, it's like demystifying a little bit the technology. Again, if you understand AI as a tool for humans, then it changes the narrative. And it's less about fearing it and more about embracing it.
Don't miss Bloomberg Technology, live every weekday.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Generally speaking, the Fed is still on board with this gradual easing cycle.
We still think the Fed actually still moves lower next week, even if they do it at a slower pace.
We are likely to see another 25 basis points cut in December.
The market will be okay as long as it's a growth story. But I think at the end of the day, the growth story is actually the important one.
Any growth uptick that we might see next year will circumvent any of those headwinds. So that's the way that the market has been behaving.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
90 minutes away from the opening bell in New York City this morning. Good morning to you all. Equity futures right now negative by 0.5%. The scores look like this on the Nasdaq 100. We're down by 0.75%. Your day ahead, 8:30 Eastern Time. U.S. retail sales. Looking ahead to that after CPI, PPI, and jobless claims. Keep this Federal Reserve at the moment just a little bit cagey about reducing interest rates at the December meeting. We heard from Susan Collins, the Boston Fed president, in the Wall Street Journal this morning. It's not a done deal.
It's certainly not a done deal. And Powell, basically everybody we've heard from, let's be honest, be it Collins, be it Kashkari, be it Logan, are giving themselves that optionality heading into December. You see the market moving off of that pricing. I gotta say, John, it does feel like the good old days where this market is reacting to macro data and to Fed speak.
Which is why retail sales is also going to be incredibly important in 30 minutes time. Paul Donovan was talking about the U.S. consumer back on display today ahead of the holiday season. Spending should reflect economic reality, which is a notable improvement in living standards, not economic perception, which is somewhat soured, which I would say we saw in the election results.
Going into that retail sales data, bond yields lower across the curve, particularly the front end. On a 2-year, we're down 4 basis points at 4.30. On 10s, we're stabilizing around about 4.43. Coming up this hour, we'll catch up with Ross Mayfield of Baird as traders dial back December rate cut bets. Frank Lee of HSBC on why NVIDIA's AI train ride is showing no signs of slowing down. And Steve Rasciuto of Mizuho on why he thinks the 10-year could creep back towards 5% in 2025. We begin this hour with stocks on track for a losing week. As traders digest Fed Chair Jay Powell's hawkish remarks, Ross Mayfield of Baird staying optimistic, writing the bull market is set to continue into 2025. Near term, sentiment is likely the biggest risk, animal spirits returning to markets. Survey data is bullish and positioning is risk on. Ross joins us now for more. Ross, welcome back to the program. I want to start with the Federal Reserve and what you thought of Chairman Powell's comments yesterday and whether you think they're setting up to pause in December.
I think they are, but I would caveat it that we still need to see that that labor market data first. The last report, non-farm payrolls, was obviously very messy. Hurricanes, strikes, so there was a lot to digest there. I think that one more sour labor market report could put a 25 basis point hike back on the table. Absent that, though, I think the economic data has been strong enough to warrant a pause and let them get started in 2025 with a cut in January.
Ross, that strong data has led to higher bond yields. Those higher bond yields, some people are making the argument, has started to constrain equity markets this week. The rally has lost some steam. Do you put any weight on that argument?
Yeah, absolutely. Outside of sentiment getting away from us, I think probably the biggest risk to markets right now over the next 3 to 6 months is just higher long-term bond yields. You know, we've seen even in this bull market that pushing up through 4.5% on the 10-year towards 5 has been a weight. Even if it's for the right reasons, at a certain point, those higher yields constrain equities. I think that is a risk. So we're glad to see it. I think it is because economic data has been strong, but to the extent that it pushes the Fed way out into the future, you know, markets are going to be a little more volatile. I don't think it's cause for a 10% sell-off or anything like that, but it certainly caps the upside here.
We've certainly seen that volatility in treasuries, Ross, in a way that historically we haven't. Bank of America's Jared Woodard wrote that, in our view, treasuries are just for trading. Consensus 60-40 portfolios that hoped that bonds would be a hedge that only worked in a 2% world of record low inflation. Is he right? Are treasuries just for trading now?
No, I don't think so. I mean, for most of our clients, treasuries at this point are for income, right? I mean, for 15 years, you can get 4.5%, 5% on something as safe as a 10-year treasury. We had clients who would stretch way out on the credit spectrum, look to high-yielding equities to get that income portion of the portfolio to support them in, you know, retirement or later years of their investing careers. So I think treasuries can definitely be for income, and I think at a certain yield, they can be a hedge as well. I do think that 2022 is a wake-up call that stocks and bonds can go down at the same time. But I don't think the 60-40 portfolio, even if constructed with something as safe and simple as treasuries, is anything close to dead over the next 5-10 years.
But one of the big arguments for owning treasuries has been reinvestment risk, that yields are going to come down and you have to get into this market. Ross, that isn't what has happened. Yields have been pushing higher. What does that do to an investor psyche that has been told that so frequently? Does that cause more of an aversion to jumping into the treasury market this time around?
Yeah, it's certainly possible. I mean, the headline yield, I think, is the first thing people see. So looking at the 4.5%, 5% yield on a 10-year it is attractive. Now, obviously, seeing your portfolio down, your prices down, has been a real gut punch for our clients over the last couple of years. You know, when bonds had basically been in a bull market for 40 years. You know, I think the other thing is we have a lot of people on the personal finance side of things who are waiting for rate cuts to look to something like a mortgage rate to refinance, and instead you've got the 10-year yield pushing up higher. So I do think there is kind of a disconnect in the bond market right now. I think it'll be rectified somewhat in 2025 as we get clarity on the Fed's path, though.
The other play that's had a lot of false starts is diving into Europe, Ross. And Barclays points out that Europe versus the U.S. has had a record underperformance year to date. There's this other argument starting to form that maybe because of the economic weakness in Europe, this is again Bank of America's argument, that you're going to get a lot of cuts and you should be buying Europe. Ross, can you be buying Europe right now?
If forced to make a choice, I would still prefer the U.S. over Europe. I think that the sector concentration is better in the U.S. You've got more growth, you've got more technology. You know, the problem with Europe over the last 10 to 15 years, or at least one of them, has been the sector concentration is sectors that haven't been working. It's more staid, it's more staples and energy and things that, you know, quite frankly, we don't expect to work as well as tech and consumer over the next year plus. So you also have the strong dollar story to contend with. Clearly, the market thinks that Trump is going to be a strong dollar president. That's a headwind for internationals. So I don't think you need to get out of Europe entirely, but if forced to make a decision, I would still prefer U.S. markets over Europe.
Danny, you need a lot to change in Europe and change pretty quickly. Think about what needs to happen here. We've got a call potentially between Putin and Scholz. That war needs to end. 1. 2, you need to see Germany turn around and take some real economic leadership and loosen the purse strings. That might happen. If those things start to line up, then maybe you can construct an argument to say, okay, given what's priced, which is not much at all, things can get better.
The Germany piece is just such a large question mark, though, with an election coming up, which, by the way, is going to coincide with Trump coming into office. There isn't clear leadership there at the moment. But I mentioned Bank of America, Michael Hartnett, out today saying buy Europe ahead of the inauguration, purely and simply on the fact that the ECB is going to be cutting rates. That's maybe more tactical, though, and less of a big structural change for Europe.
They're going to have to ease big time. They have gone from worrying about inflation to maybe, and I think Deutsche Bank was the first to say this, the prospect of disorderly disinflation, because things could go the other way so quickly. But I'm with you. When it comes to Europe, there's big structural problems in Germany. Massive structural problems. Anne-Marie, we've talked about this for years. Security, relying on America. Energy, relying on Russia. Economics, relying on China. Every single one of them has major cracks in now.
And they enslaved themselves to cheap Russian gas. So when the war happened, this is the problem for their manufacturing base. They're paying a lot more for their energy infrastructure that they need. And then you saw this U-turn from the German government saying maybe as a collective bloc, we need to start thinking about energy security. But they weren't thinking about that when they were the ones benefiting from that cheap gas.
And I think we have to remind people that President-elect Donald Trump is not the source of the problems for the Europeans. These are choices the Europeans made. What President-elect Donald Trump is doing is accelerating the process for them to actually have to find solutions and find solutions quickly. This is policy in Europe. We need to talk about policy in America as well. Ross, can we finish there? I want to understand your underlying assumptions on sequence, on timeline, on size. Ross Mayfield of Bay, I'm now told, is gone. He's now logged off from the conversation, so maybe he didn't want to carry on that conversation. So we could carry on that conversation. Sequence, timeline, size. We had Isaac Boltanski of BTI join us a little bit earlier this morning, and he was talking about how aggressive the timeline would be for Republicans because they've only got 2 years.
I got to say, Isaac shocked me, because what I'm hearing from people is that they think this deal can get done in 2026. To Isaac's point, though, maybe the actual signing or the voting starts a little bit later down the year. But he says once these cabinet appointments are in place, even now they're talking about what needs to happen in terms of pay-fors to get these tax cuts over the finish line.
The market needs to know this timing. And of course, before it needs to know the timing, it needs to know who Treasury Secretary is. And I think that gives us some sort of shape about priorities, because it is a market that is looking through tariffs, at least for the moment. If you do get what Isaac is saying, and they're straight out of the gate with things like tax cuts, that will obviously be market positive and maybe allows this rally to carry on. If that's not the shape, it could change on a dime.
Treasury, Commerce, Energy, NEC, SEC, FTC, these are the names we're still waiting for the financial markets to really understand President-elect Donald Trump's priorities.
Why did Russ run away? Equity futures right now on the S&P down by about 0.5%. Let's get you an update on stories elsewhere with your Bloomberg Brief. Here's Yahara Heckes. Hey, Yahara.
Hi, John. Two of Elon Musk's companies are moving to secure multi-billion-dollar increases in valuations through new deals. According to the Financial Times, SpaceX is gearing up to launch a tender offer that will sell existing shares in the business at about $135 each. The sale would value the company at more than $250 billion. Meanwhile, Musk's artificial intelligence startup xAI has reportedly raised $5 billion at a valuation of about $45 billion, nearly double its valuation from a few months ago. And sources are telling Bloomberg Russian President Vladimir Putin and German Chancellor Olaf Scholz are planning to hold a phone call today. The call is the first direct communication between the two leaders in almost 2 years. It comes at a critical time for Ukraine as the country braces for the third winter under attack from Russia. Uncertainty over Ukraine's support from Western allies has also been growing ahead of Donald Trump's return to the White House. And Donald Trump and his incoming policies have been the topic du jour at the APEC CEO Summit in Peru. Speaking with our own Lisa Abramowicz, JP Morgan CEO Jamie Dimon suggesting that the impacts of Trump's proposed tariffs may not be as damaging as many have feared.
He's not against trade. He thinks that a lot of these things have been unfair against the America. And there are examples where that's true. If they do it, it'll be judiciously, intelligently applied. And, by the way, it'll get people to the table. Read his book. I create options. He's going to create the option. I just hope it's done wisely.
Trump yesterday ruled out Dimon for a role in his next administration, but praised the CEO for his, quote, outstanding service to our country. That's your Bloomberg Brief. John?
Yahara, thank you. This was never a thing. How did it become a thing?
Because our colleagues asked the former president, when he was the former president, before president-elect, would you consider maybe, could he be a Treasury Secretary? He said, sure, I'd consider him. There's a lot of people under consideration.
Jamie Dimon made it a thing. He wrote an op-ed in the Washington Post that Republican or Democrat, they should have private business in the White House.
So he was kind of flirting with it, right? And at the same time, then he turns around and says, I don't want a boss.
Well, I think President-elect Trump liked what Jamie Dimon said at Davos, which was Trump was right about a lot of things. He was talking about things like tariffs. He was talking about things like NATO, telling the Europeans you need to spend more, get to the 2% of the budget that you're supposed to be contributing. And then that sort of took on this whole story that we're still talking about today.
I'm pleased we can put that story to bed. Up next on the program, the Morning Calls Plus, Frank Lee of HSBC on why NVIDIA's AI momentum can only keep growing. That conversation up next. From New York City this morning, good morning.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
As we spend some time here on the broader presidential race,
let's focus in on European politics.
Makes you wonder how politics might play out.
US retail sales at 8:30 Eastern Time. This from BMO's Ian Lingen. Would we be shocked by a negative print? Not at all. However, it is in our base case scenario, leaving us biased to see the current consolidation continue as opposed to expecting a more dramatic fall in 10-year yields. Well, here is your 10-year yield this morning, and good morning to you. We're down a single basis point on the 10-year to 4.42. In the equity market, we're negative by about 0.5%. Let's get you some morning calls. First up, Wells Fargo upgrading Morgan Stanley to equal weight, expecting shares to benefit from a rebound in capital markets activity. Their stock is up by 0.4%. Next up, Morgan Stanley downgrading Solar Edge to underweight, seeing numerous question marks under the incoming Trump administration. We're down another 4.4% in early trading on that stock. And finally, RBC hiking Tesla's price target to 313, highlighting optimism on the car maker's autonomy goals and its advantage in the automotive sector. That stock is up by about 1/3% in early trading. Turning to NVIDIA, Frank Lee of HSBC raising his price target on the chip maker to a joint street high of 200, writing, "We have pondered this amazing growth trajectory, and not only do we see no signs of a slowdown, we expect further upside in 2026 data center momentum, which in our view is still not fully priced in by the market." Frank joins us now for more. Frank, welcome to the program, sir. I just want your opinion on what's behind that train and why it doesn't slow down anytime soon.
Sure. I think it's, every couple of months, everyone, I think, goes through the same question of, can NVIDIA continue on this amazing growth trajectory? It is now approaching kind of uncharted territory in terms of the market cap of the company. But what we continue to see is that the overall spending on hyperscaler CapEx continues to go up. Since May, we've noticed there's been a 20% upward revision in the overall street consensus view for the 4 major hyperscalers. If we look at that in terms of potential server CapEx next year for AI, we think that's going to be more than enough to cover NVIDIA's growth, at least for the going into next year.
Frank, we've got to talk about the source of that demand and how strong you believe their biggest customers are, and whether those customers you think have demonstrated and done a good enough job of justifying their investment over the last few years. Do you think they're doing that?
Yeah, no, I think that's a great question. I mean, the question everyone comes back to is, there's the investment that's going on, what's the return, what's the monetization? It is a fair question, and it's not a question that I think has been fully answered. But I think from what we can see is that the spending continues, and into 2025, there's no sign of any slowdown. And we've also seen, I think, collaboration from what we're seeing on the supply chain in Asia. We continue to see many companies out here that continue to see upward revisions from the NVIDIA supply chain. So it seems to be going hand in hand in terms of the investments we're seeing from the hyperscalers as well as we're seeing in the supply chain.
But just given that, Frank, I mean, is there not some form of concentration risk for NVIDIA when Microsoft makes up nearly 20% of your revenue, Meta another 10? Aren't these real risks if any of them pull back even slightly?
That's a good question. I think, the concentration risk is still there, but it is diversifying. So as an example is, if you look at the enterprise, which is the non-hyperscalers, right, they're becoming a bigger and bigger part of this market. If you look at 18 months ago, I would say hyperscaler spending is probably 80% of the market. Now it's probably looking to be about 60% of the market. So while it is still a very high concentration, that risk is coming down. You're seeing further expansion into the corporate world in terms of spending there. So that's why you see companies like Dell, which are traditionally not leveraged to the hyperscaler growth. They're seeing very strong growth trajectory in AI as well.
So Frank, we're going to hear from the company in about 5 days' time on the 20th for their earnings. Options market's pricing in something like an 8% move either way. What sort of fireworks are you expecting on the day?
Yeah, I mean, I think, they will have a beat on their revenues. We expect they'll beat on the current quarter as well as give a better guide relative to consensus. That being said, though, the share prices have had a very good run into the earnings. And so whether that's going to be enough to really, give the market an extra boost, I think it still remains to be seen. But I think we're taking the view that, it's not just the next 2 quarters, but if you look at all of next year, we do feel that confident that there'll still be further upside in terms of the market expectations.
I wanted to ask you about what was going on with the DOJ. They sent subpoenas to NVIDIA in September. For NVIDIA, do you see a change of an environment with the election and potentially what policy regulation could look like for the company next year?
I think it's there's going to be a lot more probably uncertainty and noise now, but I think it doesn't change the fundamentals. The fundamentals is that the company's dominant position in AI is unchanged. We don't see any immediate competition. In fact, I think the hyperscalers themselves, who have every interest to try to develop their own chip to reduce their dependency on NVIDIA, is not able to do that. In fact, I think some of their own chips they're designing, the momentum is actually slower next year. So it shows you that in terms of being able to compete, we still don't see anybody narrowing that gap yet. So I think the fundamental outlook's not going to be changed. There will be probably a lot more, I think, just headlines, but I think if you just look at the overall earnings growth and expectations, I think that remains largely unchanged.
What about outside the United States? Geopolitical concerns, especially when it comes to the fact that the chips are made in Taiwan, and we have a president-elect who's very hawkish, and his rhetoric is very hot when it comes to China.
Yeah, so I think, if you think about the China exposure for NVIDIA as a whole, it is coming down. At its peak, China was probably more than 20% of its revenues. It's now at a point where I think China itself is only going to account probably for somewhere around 10% of its revenue. So it's come down in terms of that as being an end market. As far as I think where the chips are made, I think that's not something that's going to change in the near term. The TSMC is building factories in the U.S., but it's going to take some time before they're able to increased production there. So I think the reality is that while there's going to be some rhetoric around it, it doesn't change the fact that the manufacturing base is going to still stay in Taiwan given the dominance of TSMC, and that's not something that's going to change in probably anytime soon.
Frank, when it comes to the politics for the CHIPS Act, out of $123 million, a total of $33 billion out of a total of $33 billion for the CHIPS Act, only $123 million has been announced. As we head into the twilight of the Biden administration, what sort of pushes do you expect them to make with the CHIPS Act? Can anything else get done?
Yeah, there's not going to be that much time left. And I think if you think about, the CHIPS Act, there hasn't been that much money, as you said, as you pointed out, actually been given out. I think where the majority of the CHIPS Act, associated with the CHIPS Act, that's helped companies like Intel has been the tax credit. So they've been able to get, I think, the advantages on tax credit, but they haven't really gotten those subsidies. In fact, no one's really has. So I think if you think about, I don't think it changes the calculus of things. I think at the end of the day, the onshoring trend is going to continue. It will continue to take time, but I don't think it really changes, the trajectory where there will be people will be looking to change their investment cycle. I think the longer term geopolitical events is here to stay, and I think companies are going to build regardless of how much funding they get.
Hey Frank, good to catch up. Appreciate it. Going into NVIDIA earnings a week away. Frank Lee there of HSBC. Their stock is down slightly this morning, but up big time over the last few years. Some reporting from Jeff Stein over at the Washington Post.
They're the people who deal the cards. Whether it's fire or electricity, or for good or bad, or the cotton gin, or the iPhone, or the atom bomb, those are the cards, and the rest of us just play it. Would you agree with that assessment?
I think technology is the thing that causes these big step changes in civilization. So obviously you've got things like, say, the Gutenberg press, before which it was very difficult to get books. They were very rare. Even if you had a thirst for knowledge, you really couldn't do anything about it because there were very few books to read. So, and the internet is something beyond the Gutenberg press, I think. But it's when I first saw the internet coming into being in a way that the general public could use it, the humanity as a whole was developing a nervous system. So previously, the way that information would travel would be by osmosis, one person to another, or one person calling another. But the access to information was very limited. Now with the internet, it's like having a nervous system. It's like any part of humanity has access to almost all the information of humanity. Like you could be in the middle of the Amazon jungle with, say, a Starlink terminal and have access to more information than the president did in 1980.
The Fed's perceived easing bias, particularly given the comments we heard from Chairman Powell just yesterday.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I will never keep my ideas to myself again after learning this. Hi there, visionary entrepreneur. Do you have an innovative idea that's ready to revolutionize the world? Now's your chance to turn that vision into reality. We're offering you the unique opportunity to pitch your idea directly to investors who are eager to fund the next big thing. All you need to do is create a short video showcasing your concept, your passion, and your potential. Send us your video and we'll broadcast it on our media channel, reaching investors who are specifically looking for groundbreaking ideas like yours. Remember, it's crucial to include your contact details so investors can reach out to you directly. Don't let your brilliant idea gather dust. Seize this opportunity to get noticed, gain funding, and make your entrepreneurial dreams come true. Pitch your idea today and watch your future unfold. Click the link in the description to get started. Your big break is just one video away. Don't wait. Take action now.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
Futures on the S&P 500 negative by 0.5%. On the Nasdaq 100 we are down by 0.9. The scores in the bond market going into that release of retail sales in America looks like this. Yields down at the front end on a 2-year to 429.48. We're down about 5 basis points there. Down a single basis point on 10s to 441.58. With that economic data, let's cross over to Mike McKee. Good morning, Mike.
Good morning, John. Better than expected news on retail sales, a little bit stronger spending by Americans. 0.4% increase on the headline for the month of October. The ex-autos comes in at 0.1%. Ex-autos and gas the same. And the retail sales control group, which is what people really care about, is actually down by 0.1% after a 0.7 gain in September. Import prices come in up 0.3%. Import prices without petroleum, 0.2%. Both of those stronger than expected. So it just continues this pattern that we have seen of a little bit of an inflation issue ongoing. And then the Empire Manufacturing Index, this is a go-figure number, up 43 points to 31.2 from negative 11.9. So an awfully strong number there in terms of New York manufacturing. New York manufacturing, of course, not all that important to the overall numbers, but still quite interesting. Taking a quick look at what moved in the markets or in the retail sales report. We had 1.6% gain in motor vehicles, building materials up 0.5%. We expected strength there, obviously, because of hurricane rebuilding. Clothing stores down 0.2 points, and we saw apparel prices collapse in the CPI and PPI, and general merchandise stores up 0.2%. So it looks like a fairly standard kind of spread out spending during the month of October. Doesn't look like anything particular stands out here.
Mike, can you just help us explain that difference between the headline beat and then the control group miss? What explains the difference between the two, just at a first look?
Well, first look, it would be that motor vehicles probably come in stronger than anticipated. The number of cars sold, the monthly seasonally adjusted total is what goes into GDP. So it's a little bit of a confusion there. Gasoline prices also go into the headline number. They were up only 0.1% because this is reported in dollar values. So those two things are going to have an impact on the headline, whereas the control group is basically your department stores, specialty stores, the retail stuff that you and I buy, and that's what goes into GDP. So economists pay more attention to that than they do to the headline number.
How noisy does this data start to get, Mike, heading into the holiday season? Is any of that captured in what we see today in this data?
No, it doesn't look like it because this was October, but we do start to see it show up in November. Even though Black Friday is what people think of as the kickoff, we've seen a lot of spending move backwards into November, and you'll see a lot of advertisements from retailers trying to push spending out over the months of November and December. So yes, it gets a little harder to separate out what the holiday spend is, but it is seasonally adjusted, so we get some idea of what the differences are. But we are, at this point, you'd have to say, looking at this, there's no reason to think we're going to have a bad holiday season.
And Mike, I hear you've got an interview in about 2 hours' time. Can you walk us through what the big topic will be?
Well, I am here at the Boston Federal Reserve Building, so we're going to have the boss, Susan Collins, the president of the Boston Fed, talking with us, and we're obviously going to try to get some guidance on what the Fed is going to do next. A lot of questions about whether this stall in inflation is going to keep the Fed sidelined in December. Jay Powell opened the door for it yesterday, so that'll be among the chief questions, and we'll find out what people are telling her here, what the CEOs in the First District of the Federal Reserve are saying about where they see the economy going.
Looking forward to it, 10:30 Eastern Time on Bloomberg TV. Michael, thank you, sir. Mike McKee there with retail sales. A beat on the headline number on US retail sales. Yields resume the climb on a 10-year yield at the moment. We're higher by 2 basis points. The equity market near session lows on the S&P. We're down by 0.6%. On the Nasdaq 100, we're down by 0.9. Joining us around the table is Steve Rasciuto of Mizuho. Steve, good morning.
Good morning.
Your thoughts on the data, please, sir.
Well, I think the most interesting aspect, rather than the headline numbers, was the revisions to last month. The headline number went from 0.4 to 0.8. The control group number, which is the critical number, went from 0.7 to 1.2. So if you take out 0.1 after 1.2, you're still up 1.1%. It's a pretty healthy environment. And you're looking at September, which actually is more important than the month of October when you think about quarterly average data, okay, because the level that you set at the end of the previous quarter really sets the average for the next quarter. And therefore, you've got this big jump in the September period, and I think that sets the stage for a very, very healthy fourth quarter GDP number on top of several quarters of very healthy GDP.
Does it set the stage for a pause in December?
To be honest with you, the Fed should not have done 50 basis points. They should not have then been forced to come in and validate it with 25 more. The Fed is ahead of the curve in terms of what they knew relative to the economy, relative to the inflation story. So, yeah, they shouldn't do it. Will they or will they not? We'll see. But the reality is what they're doing is a mistake. Bond yields are up since they began cutting rates. That should be the message for them. Whether it's down a tenth or two, day to day, doesn't matter. We're up, what, 50, 60 basis points? That's a message.
What is the risk? What is the risk if they keep cutting when maybe they shouldn't have even started to begin with?
Well, again, the situation you have to understand is the risk is to the market less so than to the economy. If you ask most Americans, do you really care between 2 or 3%? The answer is no. If you ask a bond investor that's yielding, 360 at the time, well, what's the difference between 2 and 3%? And the answer is, well, that's 4 versus 5. That's a big move in the bond market. And that's the critical difference. It's not for the underlying economic environment, it's for the bond market. The problem has not been the Fed for the economy. The problem has been the Fed and the way the market has been pricing it. And therefore, it opens the markets to risk. And when you've got an equity market that's very, very healthy against good earnings, there's no doubt about that, but not as good as they were, and projections of very strong earnings for next year, you have to ask yourself a question. Does the interest rate adjustment from 4% to 5% lead you in a position where maybe equity valuations need to move sideways for a while?
I want to talk about the power of this bond market, because, Steve, you said something to me last week that I've been thinking about ever since, this idea that everybody is an indexer in this bond market and that the bond vigilantes have gone away. Can you expand on that and just what the bond market can do in terms of pushing around either fiscal or monetary policy?
It really becomes harder and harder to do it because the reality is most investors are tied to a duration target. because they're indexing. And therefore, their ability to move around that index is limited, because the fact of the matter is, if you perform with the market or you slightly outperform the market, you keep your job. If you slightly underperform the market, you lose your job. So the reality is you try to stay as close to benchmark duration as possible. From the hedge fund perspective, let's be honest, they've moved out of just playing plain vanilla treasury securities and interest rate swaps and things of that nature. They're much more sophisticated in terms of structured product. They're much more sophisticated in terms of corporate product. They're much more sophisticated in terms of private equity investments. So therefore, are they paying as much attention as they used to pay to the treasury bond market as well? Or do they look at the treasury bond market and say, you know, if I stay long over here and I keep long-term rates down a little bit over here because there's no risk capital on the street, well, does that improve the entire rest of my portfolio? You know, they're in a position now to make those calculations. And therefore, you wonder whether or not the bond market is giving you the feed, which is why I think the Fed always makes a mistake when you try to use bond market indicators to tell them where inflation expectations are.
You say the bond market is telling this story and it's flashing red that the Fed shouldn't be cutting. When you look at the bond market and yields going up, is that because of underlying economic data, or are people pricing in policy changes of next year?
Well, the reality is the Fed funds rate should go out to the 2-year note. This concept of everything between the 2-year note and the 10-year note being a term premium, that's just a different way of saying it's an inflation risk premium. How confident are you that the Fed is going to get to that inflation target? So therefore, what you're seeing between 2s and 10s, to me, is inflation expectations and inflation risk. And I think what the bond market has been taking on board is we were so confident, or the bond market in general was so confident that we're going to be able to maintain 2% because we have global excess supply and we've got a declining goods portion of the equation. But by the same token, we have a service sector and a tight labor market that's leading to wages. So maybe there's more upside risk in inflation than we thought. So maybe we have to put in a little bit more inflation premium now.
How much does the December meeting, Danny and I have been talking about this, become political? Either political in the sense that they pause because they're not sure of the policies for next year, but also political in the sense that if they do pause, it means they would have cut before a consequential U.S. presidential election.
Well, I think the moving 50 required them to go in November, okay, because then they would have looked political. So therefore, they moved in November. Now in December, you can assess and say, okay, we've gone 75 basis points. It's time to look against the data and decide whether or not we need to go. And the reality is, the chairman actually said a few weeks ago that, you know, we're still trying to figure out where neutral is. And the bond market had been so convinced, and the dots had implied they thought neutral was 3%. The market's now settling in at 4%, which has been our neutral number all along. And my big concern is, maybe given the stimulus that we have in the economy, you've got to assume that Joe Biden is going to forgive a lot of student debt between now and the end of the year, because this is the one major lasting legacy he's going to be able to do. Because once you've forgiven the debt, you can't go back and say you owe it again. So the reality is you may get a lot more fiscal stimulus before the end of this year, and the whole CHIPS component that hasn't been spent. So you're in a situation where maybe 4% is the long-term neutral, but maybe we need higher than that in the near term. So maybe the real surprise is that the front end continues to price in less and less rate cuts.
So you think they might be done already?
Again, I don't think they should have been moving as quickly as they did.
I'm just trying to put you on the spot.
Yeah, no, I think they should be done, yes.
Okay, appreciate it. You've been consistent about this, and the market's moving your way, that's for sure. Thank you, sir. Steve Rasciuto there of Mizuho. If you are just joining us, data out moments ago, retail sales have beat on a headline number. As Steve really looked at this, he said, look at those revisions, really strong revisions, and off the back of that, bond yields a bit higher. Joining us now to continue the conversation, Rob Waldner of Invesco. Rob, your thoughts, sir, on the totality of the data, as the Fed might say, this week? CPI, PPI, claims, and just moments ago, U.S. retail sales.
Well, there's no doubt, Jonathan, the data's been pretty strong, both on the economy side, this retail sales number was stronger, and also on the inflation side. Don't forget, we've been getting several higher than expected core inflation prints. You know, we've had 3.3s in a row on a month-to-month basis. And I think that's what's got the market in the last month and a half kind of really taking out Fed cuts out of the pricing.
We've really taken out Fed cuts. Rob, has it gone far enough? We're just hearing from Steve Rasciuto, who said that the surprise could be on the front end pricing out even more. Would you agree with that?
I disagree with Steve. I think it's taken out too much, actually. You know, we've had these cycles in the economy recently where you get a series of strong data and then you get weaker data. And, you know, we're in a cycle now where we've gotten a bunch of strong data. The narrative is switched to be all about strong data and fiscal risks. And it's always paid to trade against that narrative when the narrative gets too far one way. And if you go back and listen to Powell yesterday, he said, we believe we have inflation under control. We are going to get rates down to what we think is neutral. He thinks neutral is somewhere closer to 3.5. And he did acknowledge they may slow down, but he didn't say they were going to stop. So I think they're on a path to continue to cut rates. We have just more than 50% price for December now. That's not very much. We don't have that much price for next year. So, you know, we think that we think the inflation problem really is in the rearview mirror. We think it's shelter that's holding inflation up now, and that will come out. And when that comes out, it will become clearer that the Fed is right, and Powell will continue to cut rates. And the market's not priced for that right now. The market has really been taking this cuts out. So while we were, you know, pretty negative on treasuries tactically at 3 3/4 or so, you know, we think treasuries are a good buy here.
Rob, do you think, and I want to understand how you think about the bond curve, there are some people who believe that the Fed's easing bias actually contributed to higher long-end yields over the last 6 weeks. And there are some people who believe this morning, with your call to go into the long end, but for very different reasons, they believe that as they erode that easing bias over the last few days, that may actually limit the climb on the long end, on a 10-year yield. Do you put any weight on that argument?
There's definitely some value to that argument, Jonathan. If you go back to the surprise rate cut of 50 basis points, we pivoted the yield curve steeper, right, on that announcement. So that pivot of the Fed towards easier financial conditions led to a steepening of the curve. That, however, does not mean that's the only driver here. We continue to acknowledge that the best overall way to think about the level of yields in the U.S. is to think about how much is priced into the Fed. So when you go back to when, you know, the treasuries were at 375 over a month and a half ago, 10-year treasuries, we had successive rate cuts priced into the market. What's really driven this move from 375 to 440 or so is taking out those cuts. There could be some impact. The curve is a little bit steeper, and 2s, 10s is steep now, but the biggest driver is rate expectations from the Fed.
And of course, so much of that, Rob, comes down to where neutral is. I wonder what you make of the Dallas Fed's Lori Logan talking about this week, saying that she sees substantial signs that the neutral rate has increased and some hints that it could be close to where the Fed funds rate is now. Do you think we're going to hear more Fed officials saying something similar to that?
I doubt we'll hear a lot of Fed officials saying that. I think that she may be acknowledging we don't think neutral is not something that's set in stone and never moves. It depends upon what the underlying momentum, what the potential of the U.S. economy is. And we know with the productivity growth that we've had and with the boost to the labor market that we've had coming out of the pandemic, neutral is probably a little bit higher. But in our view, neutral is traveling back down to a more longer-term neutral level, which would be close to 3.5, which we think that's also where Powell thinks it is. But I think it is clear that, you know, neutral is not something you can just set in stone and leave there forever. It is dependent upon the factors that are driving the economy.
And very difficult to observe. Rob, thank you, sir. Rob Waldner there of Invesco. We're all making this up as we go along. I think there's a sense that the market believes neutral is closer to 4, and until recently, the Fed thought it was closer to 3. And their guidance was consistent with the belief it was closer to 3. What's sort of crept into the conversation over the last few days, I think, and is consistent with all the Fed speakers we've heard from so far, it's just a bit of nervousness about whether it is closer to 4 or not. And if you're not sure, you go a little bit more slowly, and you extend the timeline to get back to whatever neutral might be.
And what we've kind of heard is that evaporation of that confidence almost, because the Powell we heard from when they went from 50, basically talking about the time is now, he felt really confident that we needed to cut fast because neutral was lower, that you need to hurry up and get there or else you'll have some sort of economic damage. If you're not sure where it is, you have to slow down because the risks of overshooting it become all that more acute.
There was this phrase, recalibration. And we thought recalibration was maybe 150 basis points of cutting on autopilot Turns out maybe recalibration was 75, and we're there already, and it's like, wait and see. We'll continue this conversation through the weekend, into the weekend, and through next week, and into year-end. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahira Hackers. Hey, Yahira.
Hi, John. The Washington Post reporting hedge fund executive Scott Bassett is expected to meet with Donald Trump today. The meeting comes as Trump considers who's going to run the Treasury Department and as transition co-chair Howard Lutnick makes a late play for the role. There is speculation among transition officials that Trump could still pick someone else, such as former White House economist Larry Kudlow or top trade advisor Robert Lighthizer, though Bassett and Lutnick are still viewed as the favorites. Meanwhile, Axios is reporting that Israel destroyed an active top-secret nuclear facility in Iran in its strikes on the country last month. Citing U.S. and Israeli officials, it says the strike significantly damaged Iran's efforts to resume nuclear weapons research. U.S. and Israeli intelligence had detected activity at the facility, including research procedures they say could be used for nuclear weapons. Iran has continued to deny that it's pursuing nuclear weapons. And in sports, the Eagles have extended their division lead after beating the Washington Commanders last night during Thursday Night Football. It was another stellar game from running back Saquon Barkley, who ran for nearly 150 yards and 2 touchdowns. Elsewhere, hockey superstar Connor McDavid became the 4th fastest NHL player in history to reach the 1,000-point milestone. At just 27 years old, McDavid becomes the 99th overall player to reach 1,000 points and the 2nd fastest in franchise history, behind only the legendary Wayne Gretzky. That's your Bloomberg Brief. John?
Hey, Yahira, thank you. Thanks for this morning and the whole of this week. That story out of Iran, it's like a scene out of Top Gun Maverick. Going into Iran's secret nuclear facilities, get in, get out, undetected.
Yeah, I mean, it's made for TV out of central casting, if you will.
There's a lot of news going on with Iran as well. Did you see that Elon Musk, according to the New York Times, met with the Iranian ambassador to the United Nations? Now, we've had points in time where Democrats under the Trump administration also met with the Iranians, but this might come close to the Logan Act.
Kerry was criticized for doing something very similar. Something very, very similar. Up next on the program, setting you up for the week ahead. That conversation up next, and we'll catch up with Bremo in just a moment. From New York, this is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington. It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Stocks are down by 0.6%. The opening bounce about 38 minutes away. You see yields just a bit higher now on the session following better than expected revisions to retail sales and a headline beat as well. The trading diary for the week ahead looks like this. Later on today, we'll catch up with the Boston Fed President Susan Collins, speaking with Bloomberg's Mike McKee at 10:30 Eastern Time. Tomorrow, President Biden meeting with Chinese President Xi Jinping on the sidelines of the APEC summit in Peru. Tuesday, Walmart and Lowe's report earnings. Wednesday, results from Target, plus the big one, NVIDIA. On Thursday, more Fed speak from Goolsby, plus another round of jobless claims. As we look ahead to that Biden-Xi meeting over the weekend, Lisa joins us now live from APEC. Lisa, walk us through the headlines so far at this get-together and what you're looking for into the weekend.
A lot of the headlines are actually below the radar. A lot of it is this question mark about where the U.S. presence will be here, given the fact that you're not seeing as big a presence from U.S. companies as you have traditionally, and you're seeing a massive presence from China as well as Southeast Asia. But China, yesterday, Xi Jinping rolled in here with quite a procession and flags, really shutting down the whole plaza. A real question here about what the vacuum of power that is being left by a lame duck president who will be meeting with Xi Jinping, what that will be filled by. China right now is being aggressive, trying to fill that gap by investing in places like Peru, like Chile, like Argentina, like Brazil, places with things like lithium, with copper, with other precious metals, with agriculture. Where is the U.S. in this? And what I could feel from a lot of companies here from the United States was, where is the cohesive vision for U.S. companies to invest overseas in some strategically important places?
Trump is certainly the elephant in the room, and he was the elephant in the room of your panel yesterday with Jamie Dimon. What was his message to the president-elect?
To start having one now. The response that Jamie Dimon was giving was to President-elect Donald Trump's message to him, saying, you know, I respect this guy, but he's not going to be my Treasury Secretary or in my cabinet. Look, this is a lot of noise. There's a bigger takeaway from my discussion with Jamie Dimon. First of all, he doesn't necessarily see inflation coming down nearly as much as markets do, kind of to what you guys have been talking about with respect to retail sales. But on a broader level, he buys into this idea that we're going to see an M&A boom, that we are going to see some more investment from U.S. companies into the United States and elsewhere. But he also raised this point, where is U.S. presence around the world? This, to me, I think, really is the main takeaway.
Lisa, great work, and looking forward to your work over the weekend as well. And looking forward to having you back next week. Bramo there, live from Lima, Peru. A special thanks to Danny Berger, to Anne-Marie, as always, kinder. Coming up on Monday, Steve Major of HSBC, Amanda Lynham of BlackRock, Henrietta Trays of Vader Partners, and the former St. Louis Fed President Jim Bullard. We are back in a Trump news cycle, which means you get no weekend anymore. It just goes on and on and on and on and on. From New York City this morning, good morning to you all. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Welcome back to another NITO ATP Finals update for Bloomberg TV and Radio. From Tennis Channel, I'm Andrew Guy. Taylor Fritz fought back from a set down against Alex de Minaur in Thursday's opening match. The defeat eliminated the Aussie, but helped Fritz clinch his spot in the semifinals after other results went his way. The Californian will be making his second appearance in the Final Four after reaching the semis 2 years ago. And don't forget, you can watch all the action live on Tennis Channel. Our daily coverage starts at 5:30.
From our studios in New York and San Francisco.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Futures are lower. I'm concerned that the Fed just isn't going to cut as much as we want. 30 minutes until the start of the cash trade. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, Powell tells Wall Street to cool it, saying he sees no reason to hurry rate cuts. In the next hour, we're going to get the view from Boston Fed President Susan Collins.
Trump deals a blow to EVs. Shares slump on a report that he plans to repeal an electric vehicle subsidy. We'll get reaction from the CEO of Lucid, Peter Rawlinson.
And Trump's cabinet filling up quickly, but there's one notable absentee, Jamie Dimon. The JP Morgan CEO says he didn't want a new boss anyway. Let's take a look at where markets are trading 30 minutes until the bells ring. We have a down day on Wall Street in the pre-market. Of course, retail sales coming in a little bit hotter than expected here. You can see the reaction in stocks right now. The S&P 500 down about 0.6%. Big tech really taking it on the chin. Your NASDAQ 100 down about 1%. Pre-market. The bond market, not sure how to feel. Of course, the bond market since the end of September has been seeing yields shoot higher. Now, of course, seems like the rest of the market is catching on to that message, but 10-year yields still camped out at about 4.45%. Matt Miller, I say this every morning. Very high.
They're pretty high, and maybe that's why people are just still pouring money into money markets. This is a look at the pricing for Fed rate cuts, and we're now below 60% that the Fed even cuts at the next meeting. So as rates rise, the bond market is sending a signal, and investors are starting to clue in, especially since Jerome Powell kind of told us directly yesterday.
I mean, I wonder if by next year we're going to be starting to talk about Fed rate hikes once again, but we will see. Some stocks to watch. We're watching Ulta Beauty down about 5.7% this morning. Warren Buffett's Berkshire Hathaway sold most of its shares in Ulta and bought Domino's and Pool stock. Also looking at electric vehicle stocks after reports that Trump's transition team has been discussing ending the $7,500 subsidy as part of the broader tax reform effort. We're going to discuss that with the CEO of Lucid next hour. Tesla, though, still up almost 0.3%. Rivian now down only 1.2% nearly. Lucid down about 0.5%, Matt.
Yeah, a little bit of a comeback in terms of futures. Of course, we got this news yesterday on electric vehicles during the session, and as a result, you saw Tesla trade down 6%. Still, Elon Musk has other ways to make money.
Oh, yeah.
As we're learning from the FT today.
That man has a myriad of ways to make money, especially when it comes to some of his private companies, SpaceX and xAI. This is according to the Financial Times that SpaceX, which of course is the largest private company in the U.S., it's preparing to launch a tender offer that will sell existing shares at about $135. That would value that company at $250 billion. That's up from $210 billion, which was already a lot. It's just staggering how big this private company is.
Yeah, and it's interesting. These tender offers, they happen a couple times a year, and it is a real model for a lot of Wall Street here on how liquid potentially a private company can get.
For example, Stripe has employed this as well.
Exactly.
I could watch this chopstick landing over and over again. So amazing. But I mean, is it really that profitable? Is there so much scalability here if we're not spending all our money going to Mars?
Think about it. I mean, SpaceX, it's probably going to benefit from the fact that Trump is so close, or rather Elon Musk is so close to Trump right now. They want to launch...
Right now, being the key part of that.
I know, as we've been talking about, how long will this friendship last? But SpaceX wants to launch 6,000 low Earth orbit satellites. Of course, that's for the Starlink network. And he's argued in the past, of course, that it's regulations, U.S. regulators, that have stymied his ambitions.
Hey, you know, at SpaceX, just really quickly, also xAI, FT reporting they've raised $5 billion at a $45 billion valuation. SpaceX and xAI put together is now quickly approaching a third of the value of...
I was going to say, it's only a third. I mean, we talked about how big $250 billion is, plus $45 billion for xAI, and Tesla is worth $1 trillion.
I don't get out of bed for less than $200 billion.
All right, let's talk a little bit about what's going on in these markets with Ann Berry, founder of Threadneedle Ventures. And maybe before, I was going to kick off my questions to you on Powell and the Fed, but what's your take on SpaceX? Yesterday we were talking about this ETF that everybody wants to get into.
It's a closed-end fund. It's specifically not an ETF.
Okay, well, what is it called again?
It's Destiny Tech 100, DXYZ.
That people want to get into because they think it may have access to private shares in SpaceX. Like, everybody wants a piece of this, right?
I think everyone wants a piece of Elon Musk, and let's talk a little bit about Tesla. I think what Tesla's share price does at this point has almost got nothing to do with EVs because it's Elon Musk's only public company right now. If you want a little piece of Elon, you got to buy a Tesla share. So I think if this vehicle, whether it's the Destiny's Child vehicle, Matt, or whether it's an ETF, gets some SpaceX exposure, I think the demand for that will be to get a little piece of the Midas touch from afar.
What do you think about this xAI valuation? You think about what we see in the public markets on AI-led companies and valuations. Are you going to find a better value in the private markets? And is, you know, some of that frothiness not touchable when you come to the public markets?
I think if xAI were not an Elon Musk company, I would have a different answer for you. I would hone in on your word frothiness, right? I would hone in on taking a look at what's going on with ChatGPT, with OpenAI, what's going on with Anthropic. But because it is Elon Musk, because he keeps pulling rabbits out of the hat in his private companies, I think people say, look, I'm taking a bet on him as much as
he's suing now OpenAI as well as Microsoft and the Attorney General of California.
A long-running feud, of course, clash of personalities there. But it's interesting. You make the point that everything Elon Musk right now is turning to gold. And really, you've seen that big rally across all asset classes, particularly in the stock market, maybe not the bond market, rally hard since the election. But we've seen a little bit of a retracement. There's a great story on the terminal that U.S. stocks have already reversed a third of that post-election rally. Do you think that sounds right? Is there more of that retracement to go?
I think there is some more retracement to go for a couple of reasons. Number one, I think the stock market was expensive even before this Trump rally, and I think people are taking stock and saying, oh my goodness, equity risk premiums are just at multi-decade lows. Is this really making sense? Number one. Number two, the expectation around interest rates changing. You talked about that. When we are looking at least near term, I think, inflationary fiscal policy. And then number three, Katie, we saw this in 2016. We saw this again here. The Trump rally was meant to be healthcare. Well, guess what? The vaccine producers are down very significantly on the announcement around RFK.
Obesity drug makers as well. It's
well.
Stunning.
Right. And you know, the Trump trade has also tended to be defense. Well, now you've got Doge, right? And now you've basically got the overhang of real focus on government contractors, and margins for these kinds of businesses tend to be really rich. So I think what was meant to be a cookie-cutter Trump trade and a rally that came with it, people are now saying, oh, wait a second. The execution of some of those policies may actually go in the other direction.
Yeah, the margins tend to be rich because these government contractors tend to get insanely dumb spending, right? I mean, I always remember reports when I was a kid that the Army was spending hundreds of dollars on toilet seats, yet you still like General Dynamics in terms of a stock. Why, in the face of Elon Musk and Vivek Ramaswamy, do you like these government contractors?
From a super macro perspective, and this is very unfortunate, there is a need globally for a restocking of munitions. There is a need, a lot was depleted, unfortunately, in the war in Ukraine, for example. We know that defense spending is a priority across NATO countries, NATO participants. I think there is going to be real pressure under the new administration to buy American. And I think General Dynamics will benefit from that. And yes, while I think Doge, the overhang of it is there, we will see how long the friendly coalition that is at the top of that lasts, number one. And number two, I actually think when it comes to really hardcore defense, it will be the last thing that entity that Doge will touch, just because the defense implications are so profound.
I'm going to bring us back to where Matt wanted to start, which was with the Fed, because you look at some consumer-heavy stocks here. We talked about ones like UPS and FedEx before, for example. If the Fed is not able to cut as much as investors initially planned for them to, then what comes of the consumer stocks, especially if you think that the government is going to spend less on the economy?
Well, I think if the Fed is not able to cut, which implies that there is perhaps inflation overhang there for longer. I think we continue to see this bifurcation of the consumer market. Inflation has tended to be not as bad for those in the higher income demographics, and that's where I think we will see the more classic Chanel bifurcation of things like luxury doing better than average, and we will see value start to become even more important than it has been with folks like Walmart and the low-cost players playing.
Can I just, even though I love to talk about Doge and Elon Musk has achieved so many things that everyone has thought to be impossible, our base case is not that the government spends less, right? We're not operating on that base case.
You're not taking him at his word?
I mean, it'll be amazing if he does it, but it's so unlikely that the government cuts, the U.S. government cuts spending.
At the very least, they're not forgiving student loans, right? Like, I mean, there's an expectation that there's certain types of spending that will go away.
I have a strong feeling that we will continue to debate this for the next foreseeable few months. 4 years. And we have to leave it there. It's really great to see you.
Thanks for having me.
Have a great weekend when you get there. That is Ann Barry of Threadneedle Ventures. Meanwhile, let's get a look at some of the stocks moving ahead of the opening bell on this Friday. Here's Abigail Doolittle.
Let's start off with a look at those vaccine makers that you all were just talking about on the news yesterday, that President-elect Trump has nominated or is making RFK Jr. the head of the Health and Human Services Department. He, of course, is a well-known vaccine skeptic, obesity drug skeptic, and you can see the related companies down this morning. Turning to Palantir, though, these shares are higher. There's been quite a rally for this stock up on the year into today, up 245%, continuing today amid the news that their listing is moving from NASDAQ to NYSE. And then finally, if we take a look at the shares of Applied Material, pretty decent drop at this point, down 9.1%. This, of course, is a company that makes the machinery that makes the chip, so it's an early tell on chip demand. Apparently, the quarter that they reported, it's good, but apparently the guide for this current quarter, not quite what folks expected. So this concern that we're hearing from some of the companies, and in particular, the semi-cap equipment equipment company Shinali, suggesting that maybe there's some weakness for demand out there for chips.
Abby, thank you so much for taking a look under the hood for us. Now, coming up next, President-elect Trump says there's no room for Jamie Dimon in his cabinet. We're going to have the reaction from the JP Morgan CEO next. This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Is the Vivian Tom clientele? Yeah, power women, like the dragon, dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world. Why do you position your products for this group of women? When I started, designing, I always want to do something that is empower women. When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example. My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They're like in the 20s, so it's a more affordable price for them. And then, my powerful woman's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Let's get now to high interest and look at what's making headlines around the world. Russian President Vladimir Putin and German Chancellor Olaf Scholz are said to be holding a phone call today. The call is the first direct communication between the leaders in almost 2 years. The conversation comes at a critical time for Ukraine as the country braces for the third winter under attack from Russia, which with large parts of the country's energy infrastructure damaged or destroyed. Of course, Germany is really dependent on the energy infrastructure, but Scholz is a lame duck anyway, so who cares? In 13F filings, two of the world's most prominent investors, David Tepper and Michael Burry, have signaled an end to their buy everything view on China. Tepper's firm cut its Alibaba stake by 5%, while Burry raised his China exposure but added new bearish options to hedge. And Donald Trump's cabinet continues to fill up, or at least the nominations continue to pour in. One person who won't be joining, though, is JP Morgan CEO Jamie Dimon. Trump shared on social media that he respects Dimon, but he won't be inviting him to join the administration. And Dimon reacted quickly to the news. He spoke to Bloomberg from the APEC summit in Peru.
First of all, I wish the president well, and thank you. That's a very nice note. But I just want to tell the president also, I haven't had a boss for 25 years. I'm not about ready to start.
And joining us at the desk, Anne-Marie Hordern, Bloomberg's chief political correspondent and co-host of Bloomberg Surveillance. We have a lot of names coming out of Wall Street that we know now. Jay Clayton, for example, being the next U.S. attorney for Manhattan as nominated by Donald Trump. What we don't know yet, shockingly, on Friday, is who's going to be the next Treasury Secretary.
And this is really surprising because Donald Trump ran a campaign on the economy. And what he was saying, fixing the economy, tapping into this consternation and concern from the electorate that prices are just too high, trying to remind people that inflation at one point under the Biden administration hit 9%, and yet we don't have the economic team in place. You have CEOs telling us that it's game on. Talking to you, Shonali, Jane Fraser, when it comes to M&A, but we don't know the FTC, we don't know Commerce, we don't know the SEC, and of course, the big one, of course, is Treasury and also his National Economic Director. But maybe we will get Treasury soon. Washington Post is reporting that Scott Bessent is in Mar-a-Lago going in for this meeting today with President-elect Donald Trump. Once we get Treasury Secretary, then potentially see the other names get filled out.
And let's talk about that timeline a little bit more. You referenced the Washington Post report. It feels like it's two names that we're talking about, right? Is that fair to say? Is there any possibility of a dark horse for Treasury?
I mean, with the president-elect Donald Trump and the way he operates, of course, there's this potential for a different name to be thrown into the ring. Look at what we saw this week when it came to his attorney general pick with Congressman Matt Gaetz.
Right.
But we should note as well, Scott Bessent is penning an opinion piece today in Fox News saying, let's talk tariffs. It's time to revitalize Alexander Hamilton's favorite tool. There was some pushback on some individuals, even though he seems to have the backing of people on both sides, Jason Furman and someone like Steve Bannon, but there seems to be some pushback within some individuals in the ministry, within the campaign, that he hasn't embraced tariffs as enough. And I think he's putting that to bed this morning with this Fox News opinion piece. The other one, of course, is Howard Lutnick. But Howard Lutnick is the co-chair of the transition, and the Wall Street Journal said then he threw his name into the ring. So kind of the producer now at the last minute throwing his name to the ring to be the star. We'll see what the president-elect decides on.
Sometimes I think Trump is just trolling, you know, nominating the fox to run the hen house. On the other hand, I then remember that, you know, people were going to vote for RFK, a substantial amount of people. Matt Gaetz actually won to the, I mean, it's impossible to believe in New York, but in Florida, he actually won election to the next Congress.
There's 1.1 million registered Republicans in Florida, so.
Yeah, I mean, you don't, I mean, it's beyond just Republican, right? This guy has allegations of having sex with a minor and doing major drugs, but still, Floridians voted for him, so is Trump serious about these picks, or is he just playing some 3D chess that we don't understand?
I think it depends who the pick is. Potentially with Representative Matt Gaetz, who now resigned, so he's just Matt Gaetz. Maybe there is 3D chess going on because everyone was focusing on him becoming Attorney General, the nomination, when in fact he resigned likely because tomorrow the ethics panel was going to vote on potentially making that very damaging report about sexual misconduct, illicit drug use public. Now,
they'll still vote today, right, on that?
Well, yes, but the problem is he's no longer a member. So you're no longer under the ethics committee purview if you're no longer a member of the House of Representatives. Now, who's to say that the senators can't subpoena the House Ethics Committee? That content can definitely go to the senators. Someone like RFK, though, there's two sides of the coin here. You listen to what some Republican senators say, and they say, you know, we like what he's saying about health in America, about food in America, additives that are in American Fruit Loops that are not in Canadian Fruit Loops, and the way the Americans are consuming their food and how it's unhealthy. What senators are not going to like is the vaccine skepticism he has brought to the forefront. But you make a great point. He was on the campaign trail, and people were going to vote for him, and he threw his support behind the former president, and the former president's giving him this nod. Don Jr. yesterday said, promises made, promises kept. Sure, he gave him the nod. Right. Now it's up to these individuals to sink or swim in front of the 53 Republican senators.
That's exactly where I wanted to go next, because you see what John Thune had recently said, all options on the table. How much pressure do they feel, given the threat of these nominees getting through without confirmation from the president-elect's threats here?
Well, all options are on the table, but if you listen also, I think, a little bit closer to what the Senate Majority Leader John Thune had to say, also Shelley Moore Capito was on with our colleagues last night. They continuously stress this idea of process. This is an institutionalist that is now really leading the Senate. I don't see anything coming out of him that really says he wants to negate the process and have a recess. Also, to get a recess, you still need Republicans to vote for that recess. So if you're being told to vote for this recess because the president-elect wants to get through his cabinet nominees, but you're not on board with some of those cabinet nominees, you're not going to vote for a recess.
You need more than John Thune.
You need more, yes, exactly.
All right, that's a good place to leave it. Anne-Marie, Great to speak with you. Have a great weekend. That is Anne-Marie Horadern. She is Bloomberg's chief political correspondent and, of course, the co-host of Surveillance. Now, coming up next hour, Boston Fed President Susan Collins speaks with Bloomberg's Mike McKee. That's at 10:30 a.m. Eastern. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Earnings season is here.
Third quarter earnings season, as we've been talking about, really in high gear.
Bloomberg is first to break the numbers.
We have some big earnings after the bell.
Earnings from Caesars crossing the Bloomberg terminal.
Mondelez is reporting
Reddit, AMD, Snap.
Let's keep the conversation going.
With the smartest insights.
The bar keeps getting higher. 20% growth rate. When your comps get tougher, how much can you beat and raise?
Continuing coverage on Bloomberg. Context changes everything.
Welcome back to Open Interest. Let's get a check on this sell-off in the pre-market. You can see the S&P 500 at session lows, at least when it comes to futures, down about 0.7%. Even worse, if you take a look at the NASDAQ 100, your big tech names down about 1.2%. Small caps, keep an eye on the Russell 2000 because this is very interesting. Pretty much unchanged on the day, even though you take a look at what the bond market is pricing in, now a 50% chance that the Fed actually cuts rates in December. Of course, it had been over 60% yesterday, but then you had Powell come out, say that he's in no hurry to cut rates. And
it was
then
80% yesterday morning.
Yeah, and we also had retail sales really driving home that message this morning, a little bit hotter than expected.
We have been talking about this. You have to wonder if we're going to sit here next year and talk about rate increases.
Dude, I've asked every single guest who's come on this show, where do you see rates restricting the economy? I mean, they're not restricting stocks. Spreads are at record tights since we haven't seen since 1998.
Ben, what were you saying to me? Because we talk about this, of course, before the show as well. There's pockets of the economy where rates are restrictive. Isn't your mortgage rate at 3%?
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network
that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed. I will never keep my ideas to myself again after learning. Hi there, visionary entrepreneur. Do you have an innovative idea that's ready to revolutionize the world? Now's your chance to turn that vision into reality. We're offering you the unique opportunity to pitch your idea directly to investors who are eager to fund the next big thing. All you need to do is create a short video showcasing your concept, your passion, and your potential. Send us your video and we'll broadcast it on our media channel, reaching investors who are specifically looking for groundbreaking ideas like yours. Remember, it's crucial to include your contact details so investors can reach out to you directly. Don't let your brilliant idea gather dust. Seize this opportunity to get noticed, gain funding, and make your entrepreneurial dreams come true. Pitch your idea today and watch your future unfold. Click the link in the description to get started. Your big break is just one video away. Don't wait. Take action now.
Liquidity is the lifeblood of an airline. We make very conservative decision-making about when we raise funding and how we raise funding. We try to diversify our sources, and we're always very focused on the actual rates. And we like to build in flexibility in these financing structures so that we have an opportunity to prepay debt when appropriate so that we can continue to optimize the overarching rates that we're paying.
What have you learned with the dynamic move of the interest rates that we've seen from Chairman Powell? I mean, do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge.
It's a feeling that I had in talking to Steve that he was a very different kind of CEO. He was focused on products, and had a belief that small teams could do amazing work. I love that vision. And I also love that in an environment where everyone was going to an enterprise kind of company, he wanted to refocus Apple on consumers. And it was brilliant because at the time, nobody was doing that. Everybody thought you could not make any money selling to consumers. And, you know, I've never thought it was a good idea to follow the herd. I thought I had a chance of a lifetime to work with the creative genius that started the entire industry. And I didn't want to pass that up. People have forgotten this, but Apple was on the verge of bankruptcy. And it was a really awful time, and people advised me not to come to Apple because they thought that it was headed straight down. But I saw something different. I saw the sort of the sparkle in Steve's eye. And it just meant that we could pull out this turnaround for this American treasure. And I'm so glad to have been a part of that team. He taught me the value of innovation, the fact that small teams could do amazing things. I look at the size of the iPod team initially. I look at the size of the iPhone team. These were very small teams in the scheme of things. Hiring the best people to surround you, that challenge you, that have skills that you don't, and being confident with that. And also not to be married to my past views. You know, not to be so proud you can't change your mind when you're presented with new evidence and things. He could change like this. I initially was sort of taken aback by that. And then I became so enamored with it. Very few people have that skill because they get married to their past views. And I thought it was a brilliant skill.
Tax credit. That is a major component of President Biden's climate bill. We'll talk about all of that and more with Lucid's CEO in the next hour.
Katie, I'm watching Alibaba over here, down about 0.2%. Revenue missed estimates slightly, but core domestic e-commerce and cloud sales were in line with estimates. Alibaba considering a $5 billion bond offering. I know a lot of people watching commerce around the world erasing some of the losses right now, Matt.
Yeah, we are paying attention to Chinese stocks. As I mentioned, Michael Burry paying attention, David Tepper paying attention, Alibaba looking to sell some bonds. Let's talk, though, about the chip sector right now. AMAT, Applied Materials, beat earnings estimates for the most recent quarter, but is down after giving an outlook that raised concerns over chip spending. And there's a lot to talk about in that area, obviously, as Samsung came out with a $7 billion buyback as well. Meanwhile, in broader tech and mediocre pizza, Berkshire Hathaway sold more Apple stock. It continues to do that because the weighting just gets out of control as Apple gets more and more valuable. But it bought Domino's Pizza. Let's get details with Abigail Doolittle. It's almost insulting for a New Yorker to think about eating Domino's Pizza.
Oh, I disagree with you, Matt. I would definitely order Domino's Pizza here in New York or in Westchester. I think that cheesy bread is really good, but the pizza is too. So there that you have it, Domino's Pizza up 3.5% on this disclosure that apparently Warren Buffett and his deputies like Domino's Pizza, at least the company, and think that it has a lot of potential with a 1.3 million share stake. That's 3.6% of the outstanding worth, and then that overall that is worth $550 million. Pool Corp, the pool equipment wholesaler, they have a 1% stake now in that company worth about $152 million. Those shares higher too. Now, what's out though? You were mentioning Apple. It's not just Apple. Ulta, they've now taken out most of their Ulta stake. That stock down 1.6% in reaction. Apple responding down 0.8%. Bank of America right now up just a little bit. It had been down earlier on the news that they've pared that stake a little bit. But the biggest news perhaps out of Warren Buffett and Berkshire Hathaway quarter after quarter is this cash stake. Take a look at this. At this point, a record, almost 50% of their overall holdings. They, of course, are not market timers, but it's hard to see this massive cash position and wonder if they're seeing something where they want to be more defense. Again, though, they are not market timers, and more of the talk is that they're not able to find opportunities they like. But of course, today, Katie, Domino's and Pool Corp. I'm not sure how you feel about Domino's Pizza.
Abigail Doolittle, I love Domino's.
Me too. It's
Seriously?
so good.
Yeah,
it's delicious.
Thank you for saying that. It's okay to like things. Don't think of it as pizza. It's just very oily, greasy bread with a lot of cheese on top.
I don't know.
Super saucy. It's just basically like, you know, bread doused in red sauce.
I grew up in a place that makes probably the best pizza on earth, Bexley, Ohio. There's a little store called Rubino's that makes the best pizza I've ever had. And in Westchester, the Beekman Ale House has incredible thin crust. But
all right, well, Matt is looking down at us from his ivory tower. Let's talk about these markets, though, because New Edge Wealth Chief Investment Officer Cameron Dawson is standing by. Cameron, I am obsessed with what's going on in small caps, and it's really interesting to see them outperform today, to see them outperform over the past month, given what's going on in the bond market, all these question marks over what the Fed is going to do. What is the bull case for small caps, and how sustainable is it?
Well, we think the bull case has two necessary conditions. One is continued resilient economic growth, which supports income statements, but as well as falling interest rates. If you think of the key reason why small cap earnings have been under pressure, it's because of interest costs. So we do think that you need to see interest rates move lower in that very benign, soft landing kind of environment where growth is resilient and we get lower interest rates for small caps to be able to deliver. Because if you look at earnings expectations for small caps into 2025, they're expected for the Russell 2000 to inflect to 40% growth next year, which means that you need that good economy, you need that easing pressure on balance sheets to reach that. The question is that really feasible if the Fed stays higher for longer?
Kim, I'm also wondering if what's happening here is investors finally flocking to the valuation story in stocks. stocks. You had them ignore it for so long, and watching some key stocks just keep melting higher. Is the Russell 2000 trade just a matter of buying things that are a little cheaper at this juncture?
Well, the Russell 2000 is actually trading at 27 times forward earnings. Now, that's because there's a big cohort of Russell 2000 names that are unprofitable. So you could look at something like the S&P 600, their small cap index, which is leaning more to profitable companies. And that's where you can see some valuation attractiveness. It's trading at about 17 times earnings, which of course is more attractive or lower than what we see in the S&P 500 at about 22.5 times. But again, it all comes down to those earnings estimates being able to be delivered upon. And one of the key messages from 2024 is that you saw huge revisions down to the downside in small caps. You went from expecting 10% growth at the beginning of this year to now down 20%. And so if you are going to see small caps be an attractive valuation play, it does rely upon the fact that you also have to see them deliver on those earnings.
We done with the small caps? Can
yeah,
we
you can move on.
Okay, let's get to the big boy
for now.
here. In terms of the S&P 500, you know, a couple days ago, Julian Emanuel from ISI came out with a note and said this bull market is just an infant. I think they did some studies that showed that the average bull market lasts 50 months and rallies over 150%. And right now, we're at 25 months in, so halfway through and about 65% up. We also have, you know, as a tailwind, I guess, in terms of looking back, the fourth quarter, we usually see a rally of, I think, 4%. Bloomberg did the work there. So do we continue to head up from here, Cameron? Are we going to rally into the end of the year as Santa Claus is coming to town and so forth?
So I think that there's two aspects to that. The first one is in the very short term and through the end of the year. And yes, we do think that seasonals are a very positive driver through the end of the year, mostly because we have started out so strong through the course of this year, which just means that people are sitting on big gains and they are very hesitant to want to recognize those gains in the last 2 months of the year, because if they wait till the beginning of next year, they delay their tax payments until April of 2026. So we do think that that supports this notion of a chase and window dressing into the end of 2024. Then we turn to 2025, and we think we could still very much be in a bull market, but effectively have a year that's a bit more sideways and choppy. So instead of this up and to the right, as we've had in 23 and 24, maybe have a market that looks a little bit more like 2015 and 2018, both years within a long bull market trend, but had lower returns, were a bit more sideways and choppy, that would allow us to grow into these lofty valuations, digest some stretch positioning, and at the same time present great buying opportunities if we do see some of that volatility actually materialize.
Cameron, we don't have much time left, but I want to bring you a contrarian call that we got from Bank of America this morning, saying that basically investors should buy China, they should buy Europe ahead of Inauguration Day, because their thinking is that you're going to see governments and central banks in both of those regions unleash massive support in terms of monetary policy, in terms of fiscal policy. We've heard from a lot of investors that they're backing away from some of those countries right now. Does that call make sense to you?
It all depends on the path forward of the dollar, which means that it all depends on the path forward of the U.S. economy and what the Fed does about a more resilient U.S. economy. If the dollar continues to rally, and it's overbought in the very short term, but if the dollar continues to rally, that usually is a weight on non-U.S. performance. We think that it is absolutely critical to see a U.S. dollar bear market to see sustained outperformance in non-U.S. stocks. So until you're at the point where we're ready to make a call for a big dollar bear market, that's why we continue to prefer U.S. stocks. It's also supported by earnings, quite simply. Earnings expectations, revisions have been far more powerful in the U.S. and have been negative in Europe and in emerging markets, which just suggests that there's a darn good reason as to why the U.S. has been so dominant.
Cameron, we thank you so very much for your time today. That is New Edge Wealth, Cameron Dawson. Now coming up, Jamie Dimon prepares for an M&A resurgence with the new Trump administration. We're going to bring you his remarks about regulation next. This is Bloomberg.
think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're gonna get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
All right, it's time now for our top calls. Some of the analyst action in focus this morning. And first up, Bank of America raising its price target on Disney to $140 from $120, also keeping its buy rating. The company's 2025 outlook coming in above the analyst's initial forecast. Next up, Morgan Stanley is downgrading SolarEdge to an underweight with a $9 price target. The analyst says that there is an added level of uncertainty for renewables under a Trump administration. And finally, we have RBC raising their price target on Tesla to $313 from $249. The analyst says that he's more confident that the company can achieve their self-driving goals. Sonali.
And Jamie Dimon, we're going to go to that sound now. He says that bankers are now cheering Donald Trump's regulatory approach, whether or not they supported him. He spoke with Lisa Abramowitz at the APAC CEO Summit in Peru right as Trump announced that Dimon will not be part of his incoming administration. Take a listen.
Because they have the Senate, the House, and the presidency, they have far more ability to do things like that. I think last time around, President Trump had started by saying for every new regulation, 1 in, 2 out. And I think later I said 1 in, 5 out. I think they're going to do some of that again. I think it will, the banking industry, whether you voted for Trump or Joe Biden, a lot of bankers, they're like dancing in the street because, they've had successive years and years of regulations, a lot of which stymied credit, and so and you could have kept the banks equally safe, but had them do more credit. And so to just give an example, the average bank in America, I think the number used to have $100 of deposits and $100 of loans, and now it's $100 of deposits and $65 of loans. And if that's what you want, if for some reason the regulators think they're geniuses and that's the best way to run the banking system, so be it. But I think they did a lot of things that ended in that answer, but they didn't know that was going to be the outcome. So, and I think you could talk to any industry, and they'll give you examples of regulations that could be reduced that make it easier for them to do business while keeping the country safe, while keeping the air clean, while making sure the EPA does its job, et cetera. So I applaud them. They should be looking at those things.
Do you think if there is, particularly in the banking sector, less regulation, that there will be an even steeper competition with banks getting back some of the business from private investment firms?
Probably, yeah. I mean, because if you look at, you're asking about private credit and private investment, which I'm not against, and it has grown very rapidly, and it's got pros and cons. I'm always in favor of competition, but part of the reason that they are dancing in the street, which they said publicly, they used to get mad at me, now they say, no, he's right, is half the capital. No social requirements, no AML, no BSA, no fiduciary, no reporting to the government, no insurance, no liquidity. Yeah, it's a huge disadvantage. So yeah, I think it'll make banks get back some of that business. I think it'll be more important to regional banks than to JP Morgan.
There's also a question, whether it's banking mergers and acquisitions or just more broadly, whether there's going to be a more amenable administration to tie-ups. Are you seeing from your conversations in the past 7 days with companies that they are looking to expand their M&A pipeline to start putting that together?
Yeah, so yeah, absolutely. I mean, a lot of M&A was stymied by the fact it's not just sometimes you can't get through the courts or something like that, but it takes 2 years. It takes 3 years. So make believe you're a bank, and we've seen this happen, and one of these deals actually took 3 years. It takes 3 years to get it done. So you've done a deal, it's binding, you haven't closed it, but now you've got to run the company. You can't get the synergies, you're going to be losing people. You want to start working a common culture and common technology, you can't do it. So yeah, a lot of companies are looking at, will be looking much more aggressively at acquisitions and deployment of capital, and they should.
All right, so there's a ton to unpack there. Great interview by Lisa Abramowitz at APEC. I was really, I don't think shocked is the right word, but impressed by the number in terms of deposits versus loans. I didn't know that, and I think it's amazing that a bank now for $100 of deposits only lends out $65 of that. There's also the private credit and private equity part of it. When I was listening to the interview, actually was thinking about Shonali's reaction, so I want to get that. But then the M&A piece that we've been talking about for so long, and the Chris Hughes piece from Bloomberg Opinion that says there's not going to be a boom. Contrary to everybody else in the world, including Jamie Dimon.
Including Jamie Dimon. It is interesting, though. It ties into what we were talking about yesterday with Tapestry and Capri, that yes, there's all this optimism coming. The environment should get better, but there's plenty of deals that are still pending that might die on the vine here. You think about Tapestry and Capri, they weren't confident they could get it done by February 10th. That's like 2 weeks after the inauguration. That's probably enough time to save something like that. And that's not even getting to the question of whether
I feel like
the
they just wanted an excuse. They wanted an hour
to be saved, exactly.
Well, there's the Wall Street businesses, and even to your point, there is uncertainty, but there is a comeback underway. They'll take what they can get, I think. And on the Main Street businesses, I think this is also interesting. You had a lot of big family offices buying into bank stocks. And if you think about it, Stan Druckenmiller, Soros's family office, they're buying also regional banks. And you see the regional banking index up pretty meaningfully. It's like a banker's sweet spot here to have 4.5% 10-year, right now, and a steeper yield curve that they haven't had in many, many months. And so to your point, it's not that exciting, 12 basis points.
12 whole basis points on your 2s10s.
It's not much of a slope, so this is interesting, the KBW Bank Index over 10 days. If you look at, Daniel Curtis put together a chart, which is 1334 in the Bloomberg terminal, so you just have to type G #BTV1334 and then press go, and you'll see the chart. It just shows how people have been pouring in to the KRE Bank ETF after the election. At the biggest inflows that we've seen, at least since this chart goes back to pre-financial crisis.
Yeah, really shaking up the flow leaderboard when it comes to the ETF world. We'll continue to talk about that. And coming up, investor demand remains high for SRT deals, synthetic risk transfers in the U.S., but Wall Street bets are heeding a warning. That's next in our Wall Street Beat. This is Bloomberg.
Fixed Income Fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
And it's time now for the Wall Street Beat. We are looking at the investor demand for SRTs, which are synthetic risk transfers, and why there could be some trouble under the surface. It's the subject of today's big take, and we're joined now by Bloomberg credit reporter Carmen Arroyo, who co-wrote the story. She joins us now. Synthetic risk transfers. It's when these banks take a bundle of loans, consumer loans and otherwise, they package it and take a risky part of that debt package, offload it to hedge funds, private credit firms. How does this work, and what is the concern?
Sure. So it's exactly what you said. Basically, banks tried to get like a credit insurance on the first loss of those portfolios to kind of like bolster their balance sheets, and they've become much more popular just because of the environment we're in now, and also because of the regulatory concerns.
So heading into this year, the expectation was we're going to see U.S. banks basically issue a ton of these bonds. What does reality actually look like?
We've seen banks issue these bonds in the U.S., like especially the larger banks like JP Morgan. However, we haven't seen the flood of banks that were going to come, partly because like there wasn't really a lot of regulatory clarity. So they were like pushing it back to like the latter part of the year. And we haven't seen that flood yet, but the expectation is it's yet to come next year.
So my question when reading the story was, what does the regulator think about this? I only read the first 4 paragraphs, of course. Are they just betting that the regulator won't have a ruling until the Trump administration, and then no one cares about regulators anymore?
Okay, so with SRTs, the Fed did like kind of release some like guidance last year, and that's when the banks started going to them for approval. So the regulator does have to approve every trade, and clarity on the Basel Endgame would be helpful for the banks to actually keep doing this. However, they're going to do it regardless, because in Europe, the use of this bonds is super common, and now banks trying to change to a capital-light model, they need some way to, some tool to do this.
But what can go wrong? Because at the end of the day, it's not just the Fed that is creating guidelines around this, it's also the IMF actually said that this was a financial stability question. So what could go wrong?
So right now the concern is that there's so many investors trying to buy these bonds, and there's not that much issuance. So banks have the upper hand, and they can kind of ask and whatever they want in a way. So one thing that has happened, for instance, is they're borrowing in much cheaper terms. Spreads have come in a lot. There's concern, especially from veteran buyers, that the new buyers that maybe don't know the asset class that well are more willing to take on risky names or take on laxer documentation.
But these aren't mom and pop investors. These are sophisticated and wealthy institutions.
Sophisticated investors have gotten into trouble before.
Right? Yeah, but they can deal with trouble. That's the whole point.
But not if you're making a bank riskier because you're taking off risky loans.
The bank is buying the insurance, right?
Right, but it frees them up to make more risky loans in theory.
So the idea, one of the concerns the IMF pointed in their report is that a lot of these funds do use additional leverage to buy these bonds because the tranches are very thick, so they need leverage to juice returns.
Right, and the worry is that they won't be able to pay out on that insurance should disaster strike. Carmen, great story. Carmen Arroyo, they're talking to us about SRTs, which is not, as I learned today, street and racing technology, but synthetic risk transfers. Coming up in the next hour, Thoma Bravo, managing partner Holden Spate, joins us to talk about its software buying spree. And then later we talk to the CEO of Lucid about the potential end of the EV tax credit.
Is this the best time ever to be starting a technology company?
Let's at least it's the best time yet.
Yeah.
Hopefully there'll be even better times in the future. I sort of think with each successive major technological revolution, you've been able to do more than you could before. And I would expect the companies to be more amazing and impactful and everything else. So yeah, I think it's the best time yet. Big companies have the edge when things are like moving slowly and not that dynamic. And then when something like this or mobile or the internet or the semiconductor revolution happens, or probably like back in the days of the Industrial Revolution, that was when upstarts had their edge. So yeah, this is like, and it's been a while since we've had one of these, so this is like pretty exciting.
In the essay, you actually say a really big thing, which is ASI, superintelligence, is actually thousands of days away.
Maybe. I mean, that's our hope, our guess, whatever. But that's a very wild statement.
Yeah. Tell us about it. I mean, that's big. That is really big.
I can see a path where the work we are doing just keeps compounding, and the rate of progress we've made over the last 3 years continues for the next 3 or 6 or 9 or whatever. 9 years would be like 3,500 days or whatever. If we can keep this rate of improvement or even increase it, like that system will be quite capable of doing a lot of things. I think already, even a system like O1 is capable of doing like quite a lot of things from just like a raw cognitive IQ on a closed-end, well-defined task in a certain area. I'm like, O1 is like a very smart thing. And I think we're nowhere near the limit of progress.
I mean, that was an architecture shift that sort of unlocked a lot. And what I'm sort of hearing is that these things are going to compound.
We could hit some like unexpected wall, or we could be missing something, but it looks to us like there's a lot of compounding in front of us still to happen.
I mean, this essay is probably the most techno-optimist of almost anything I've seen out there. Some of the things we get to look forward to, fixing the climate, establishing a space colony, the discovery of all of physics, near limitless intelligence, and abundant energy.
I do think all of those things, and probably a lot more we can't even imagine, are maybe not that far away. And I think it's like tremendously exciting that we can talk about this even semi-seriously now. One of the things that I always have loved most about YC is it encourages slightly implausible degrees of techno-optimism and just a belief that like, you can figure this out. And, in a world that I think is like sort of consistently telling people, this is not going to work, you can't do this thing, you can't do that. I think the kind of early PG spirit of just encouraging founders to like think a little bit bigger it is a special thing in the world.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. President-elect Donald Trump talked up Robert F. Kennedy Jr., his choice for health secretary, at an event at Mar-a-Lago last night.
I think you're going to do some unbelievable thing. Nobody's going to be able to do it like you.
But many in the medical community are skeptical, taking exception with RFK's views on vaccinations, fluoridated water. Correspondent Major Garrett.
Robert F. Kennedy Jr. helped elect Donald Trump, so this is a reward to him. And RFK Jr. has within the Trump world a constituency of his own. He's the only one Trump is allowed to rebrand MAGA. Make America Healthy Again, MAHA.
The Trump transition team reaffirming support for the president-elect's pick for defense secretary after officials in Monterey, California confirmed Pete Hegseth was investigated for alleged sexual assault in 2017. He was never charged. The Trump transition team has signaled it might back Israel if the country takes over the West Bank. CBS's Elizabeth Palmer is in Ramallah.
Right-wingers in Israel's government believe the West Bank is Israel's anyway.
To Israel.
And hope Trump will help them take it. Not only would that be illegal under international law, lawmaker Mustafa Barghouti says it's a recipe for disaster.
And that means eternal conflict.
General Motors says it's laying off 1,000 employees. WWJ's Jeff Gilbert is in Detroit.
The cuts will impact GM's salaried workforce, and most are focused here in the U.S. GM says in order to win in this competitive market, they need to optimize for speed and excellence.
Americans were doing plenty of shopping last month. Purchases were up 0.4%. Business analysts analyst Jill Schlesinger.
The strength of this report proves that the U.S. economy continues to hold on strong footing as it has throughout the year. This is just one of the reports that the Federal Reserve will use in assessing economic growth when it meets for the last time in December.
A new study in the journal The Lancet found a dramatic jump in the number of U.S. adults who tip the scales. Lead author Marie Ng at the University of Washington School of Medicine.
We're expecting the number of people experiencing obesity and overweight to rise to 260 million.
Researchers are particularly concerned about a steep rise among children. Sparks flying, and the fight's not until tonight. Mike Tyson and Jake Paul had to be separated when the 58-year-old former world champ slapped the 27-year-old influencer during the weigh-in ahead of their bout in Arlington, Texas. When a reporter asked why, Tyson answered, "The talk is over." Paul called him an angry little elf. Dow down 226. This is CBS News.
CVS.
A check of pollution in the U.S. and Asia.
Shanghai is the most polluting area in the world, according to new data combining observations and artificial intelligence. The top polluting states or provinces are all in Asia, except for Texas, which ranks 6th. The data was released during United Nations climate talks in Azerbaijan, where countries are trying to set new targets to cut emissions. But the talks have stalled, with some former climate officials calling for an urgent overhaul of the negotiations. Wendy Gillette, CBS News.
Study released by New York's planning department shows the city's empty storefronts are filling up faster than expected, thanks to a slew of new restaurants and bars. The majority of new eateries serve Mexican, Japanese, and Caribbean cuisine. Most are outside the borough of Manhattan. About 16,000 city storefronts were empty in the third quarter. That's about 11%, still above pre-pandemic levels. Deborah Rodriguez, CBS News.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good Friday morning from the Federal Reserve Bank of Boston in Boston, Massachusetts. Tom Keene, Paul Sweeney, we are live here at the Federal Reserve Bank of Boston Future of Finance Conference. We got a lot going on. We have an extended Bloomberg surveillance program for the next hour. We're going to kick it off strong. Adair Morse, conference keynote speaker, Tom, and professor at UC Berkeley's Business School. We'll get her thoughts on AI and technology. That's going to get a little high end, I think. Matt Miskin's going to join us as well, co-chief investment strategist at John Hancock Investment Management just across the street. We get his thoughts on Jay Powell's comments yesterday and where the Fed may be going here. And then at the bottom of the hour, Tom, we've been talking about it. Michael McKee is going to interview Boston Fed President Susan Collins here in Boston. We'll bring that to you. It should be very interesting.
Well, it's going to be very interesting. But yesterday, 24 hours ago, it was just a chat.
Yeah.
And then something happened yesterday. Catherine Rampell of the Washington Post cornered Jerome Powell and really got some news out of it that I would say moved
the market this morning, and President Collins has to follow up on that. My key statistic, the 10-year real yield is now in moonshot territory. We're not to 2%. But, folks, I really want to make it clear. Markets are moving this morning after the election celebration we've been seeing.
Absolutely. A little bit of a pullback in the markets. Let's get right to that. We'll go to Lisa Mateo back in New York for a Bloomberg Business Flash. Lisa, what do you have for us?
And this Bloomberg Business Flash brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around-the-clock. We've got stocks slipping after this fresh report that showed Americans, well, they're still spending. The value of retail purchases, unadjusted for inflation, increased 0.4%. That's after an upwardly revised 0.8% gain in September. October, also a tough month for America's factories. We had the strike at Boeing, the pair of hurricanes that really took a toll on manufacturing for a second month, cutting industrial production. And finally, a separate report. It shows import prices rose for the first time in 4 months in October. So we have the NASDAQ down about 1.5%, 291 points. The Dow down 0.6%, 265 points. And the S&P 500 down about 0.9%, or 56 points. The 2-year yield, 4.35%. That's little change. The yield on the 10-year, 4.48%. And that's up 4 basis points. The Bloomberg Dollar Spot Index down 0.1%. We have the Japanese yen high, stronger, euro stronger, British pound weaker. We have Bitcoin edging higher again, but still holding off its recent highs of 93,000. It's currently at 88,000. We have shares of Domino's Pizza up nearly 2%. That's after Warren Buffett's Berkshire Hathaway took a stake in the restaurant chain. Now, it also disclosed a new position in Pool Corp, and that's why those shares are up more than 2% this morning. And meanwhile, Berkshire slashed its stake in Ulta Beauty. That has shares down 2%. It also cut holdings of Capital One and Charter Communications. And finally, sources say General Motors, well, it plans to cut 1,000 salaried workers globally. That's in an effort to cut costs. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Lisa Mateo, thank you so much. We appreciate that. Tom Keene, Paul Sweeney, extended version of Bloomberg Surveillance this morning. We're at the Boston Federal Reserve Bank. They got their Future of Finance conference there, so you can check us out there. We're also on YouTube as well. So head over to youtube.com, search Bloomberg Podcast. That's where you'll find us. Tom, Boston, 92.9 FM, our news signal up here, giving us a great signal in the greater New England area. Let's kick this hour off strong. How about the keynote speaker at this whole confab here? Adair Morse, conference keynote speaker and professor at UC Berkeley's Business School. Adair, thanks so much for joining us here. You're a keynote speaker here today. What are you going to be talking about?
I'm going to be talking about AI and the use in credit. So thinking about not just in understanding AI in terms of deploying and getting better, precise underwriting and knowing people's risk and this sort of stuff, but there's a general landscape of using AI for all kinds of provision of lending to people. And then there's some red flags, right? And so kind of putting the landscape out there, we need to think about both sides. We need to inform not just policymakers, we're here at the Fed, but also the providers, right? So they can think about things that they need to step up and understand.
We were back last time I was up here in Boston. We were doing some work with the Boston Consulting Group, and they were saying as they talk to their clients across all industries about the use of AI, they want to get a commitment that they will do it in the correct way, and really, because AI is so powerful that you want to make sure that whoever they're talking to, that they make a commitment to doing it in the right way, the sustainable way. How does that apply to finance?
Right. So the problem is there's so many different aspects of what correct means.
Yeah.
Right. So if we think about AI, where it's going to be deployed, right? It's not just, it's understanding credit risk and reaching more of the population in ways that biases are hindering. So that's great. There's also targeting and marketing. There's monitoring. There's chatbots to get information, authenticating fraud, right? All these sort of uses. Along the other side, though, we have to think about things like there's been research that finds that AI teaches itself how to collude, right? Which has all kinds of, your mind goes crazy when you start thinking about that, and then AI can be deceptive in conveyance to get an outcome at once.
So this is a sequel to The Matrix 2 or something? I mean, really, that's what Reeves shows up, right?
Right.
Paul can play Reeves. I can't play Reeves. Come on. Most of the public is scared stiff of this. Let's begin with a timeline. Are you looking out to 2030 or are you looking out to 2040?
Or 2025, right? I mean, AI is already being used.
Are we ready for this?
We're not ready, nor are the providers ready, right? The providers themselves are concerned about there's startups left and right? And what are the startups doing and what inputs are we using? Do we let AI go on all the data that's available about someone to profile
Okay,
them?
but you fly into Park Avenue and you're going to talk to James Dimon and his team at JP Morgan. You're going to bring Ike Green of Berkeley along just to impress everybody. And they're going to go, we need to trust this process. What's the trust factor at this conference in Boston? Do people trust AI?
I think I don't know the answer. Do they trust? I don't think they know one way or the other. I think where we are is that right now, if we understand what inputs AI is using, so you can control that, right? Where it's going, what information it's using to make decisions. If you control the inputs, you're able to put a bound on what it can do, right? You can tell it not to lie. You can tell it only to use these certain inputs that are non-discriminatory, and other things. Right now, how that input use is getting deployed is a black box.
How, from your research, talking to providers of credit, how are they using AI yet? Are they using AI, or is it still the loan officer that I got to convince I'm a good credit?
No, definitely they are using AI, right? I mean, from the simple way, the chatbots, right? Getting information in, right? Those are AI driven, but also the processing and understanding under general parameters, right? Under, how would you maximize for profitably lending, or how would you for profitably marketing new products to people, right? They are are they deploying underwriting at a full scale using AI yet? No, probably not. There are some exceptions to that, but we're using it little bits here and there, and pretty soon the whole arena changes.
Is America behind on this, or are we leading the way?
Probably leading. Leading is not, there are other countries that are also deploying. China's deploying. There's a whole movement in Europe and a law in Europe regarding some of these things. And so we are ahead, but we are with others in that lead.
So, Paul, I got a credit rating of 100. It's like so low. They don't even talk to me. And I get emails all the time. We'll give you 45,000. We'll give you 10,000. Sure. Is that AI driven? Is it your fault?
I don't know the answer to that question, but that's where we are, right? That's where we, there are people that are, they have credit scores that maybe those credit scores are not right, and maybe AI helps, right? And then there are other people that,
All right, well, here's my concern. Is that small community banks, they're not going to be able to make the technology investments. Therefore, whatever benefits may be out there, and I don't know if there are, by the way, you have to convince me, I'm afraid that they're not going to have the same capabilities as, say, a JP Morgan Chase.
So I'm a big fan of having a community financial architecture, banks, the lenders, the CDFIs, right? And the reason it's so important is because in downturns, the research shows that these local community-facing lenders and banks, they're able to stick with their customers when they need them the most. So far, technology has not replicated that. Now, whether AI becomes a localized lender because its ability to act local is a question we don't know. And what does that mean for the financial architecture of the United States is a complete unknown.
So, I mean, at the end of the day, if I'm providing credit, I want a good credit environment where I get paid back, where I'm able to distribute, debt into my marketplace, but I want to get paid back. I don't want to take undue credit risk. Ideally, AI will help me do that better.
Ideally, it will help you do that better, and also to manage new products and new services for customers to figure out where they might be exposed to risk, or where they might be evolving in their business or household.
30-second question. We don't have enough time. It's unfair. Type 1, Type 2 construct. Is AI in banking going to help banks or help them not lose money?
It's going to help them grow their business.
type 1.
That's kind of what they want to. That's what they want to hear. Adair Morse, thank you so much for joining us. Adair Morse, she's a professor of finance at the University of California at Berkeley. Love that school. Beautiful campus out there in the Bay Area. It's the Haas Business School, great business school there as well. Talking about this market here, Tom, I think what we're seeing is just a little bit of that risk off because we had such a risk on euphoria. You look at your favorite Bitcoin raced from about a $60,000 level up to about pushing up to 90,000. That's kind of tells you what the markets, the animal spirits were just in the aftermath of the election.
Hot stove leak. It's almost cold here.
I know.
We're in Boston. The Red Sox make their first transaction. They are pennant bound. They took a piece of me, Justin Wilson from the Cincinnati Reds.
Oh, boy.
To fill some innings throwing left-handed.
What happened to your Red Sox? They used to spend like they were a major market team.
You know how Judge dropped the ball in the fifth inning?
Oh, yeah.
The Red Sox did that all year.
Okay. You got to have the Sox back because the Yankees,
Justin Wilson,
that good rivalry.
Reds.
Exactly, right.
Give me Dela Cruz.
Anybody. S&P 500, we're off 62 points. The Dow's off about 250 points. That's about 0.6%. NASDAQ taking it on the chin, off about 1.7% there. That's about 328 points. Looking at the yield curve, time yield's coming a little bit higher, backing up 4.47 on your 10-year. We will keep an eye on that. And then, of course, looking at WTI crude oil for Alex Steele. I know she's listening. We are just around $68 per barrel WTI crude oil. Gold higher. Again, Dennis Gartman. We call that out for Dennis Gartman. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red on the screen. Traders price in roughly 50% chance that the Fed delivers a quarter-point reduction at its December meeting. Now, that's down from about 80% earlier in the week. So now the Nasdaq off about 1.5%, down 345 points. The Dow down 0.5%, 249 points, and the S&P 500 down about 1% at 64 points. The 2-year yield at 4.34%. That's little change. The yield on the 10-year 4.48%, and that's up about 4 basis points. The Bloomberg Dollar Spot Index down about 0.1%. We have the Japanese yen stronger, euro stronger, British pound now weaker, Bitcoin down about 0.2%, still around 88,000. To commodities, we have Brent crude $72 a barrel, WTI crude $68 a barrel, spot gold higher at $2,569 an ounce. Shares of vaccine makers, they're trading lower. This is after President-elect Donald Trump, he picked vaccine skeptic Robert F. Kennedy Jr. for health secretary. So now we have Pfizer down 4%, Moderna off about 6%, and BioNTech ADRs falling 5%. And shares of aluminum producers were there on the rise. This is after China canceled that tax rebate on exports of certain commodities. Alcoa up 8%, Century Aluminum up about 13%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
All right, Lisa Mateo, thank you so much. We appreciate that. Tom Keene, Paul Sweeney, we are live here at the Boston Fed Bank in Boston, Massachusetts. It is our Future of Finance conference here. And we're also streaming live on YouTube, so you can head over to youtube.com, search Bloomberg Podcast. That's where you'll find us. And here in New England, Tom, 92.9 FM, a big signal. You know, great being in Boston. So many great memories for me here as a sell-side analyst coming up here talking to the great mutual funds like Fidelity, Wellington, and one of the heritage names, Tom, John Hancock.
And the biggest problem in the modern day is your appointment. Am I in new John Hancock or old John Hancock?
Well, how do you find newer?
The hours were wasted on that. Which skyscraper to go?
They've been there forever. Matt Miskin joins us. He's the co-chief investment strategist for John Hancock Investment Management and a noted Boston Red Sox fan. John, thanks so much for joining. Or Matt, thanks so much for joining us. Hey, Matt, what changed for you and your team last Wednesday morning when you guys got into the office and huddled around to say the world's changing a little bit out there?
Yeah, we're seeing a macro knuckleball. And this is a Tim Wakefield reference. May he rest in peace. You know, growing up outside of Boston, watching Tim Wakefield pitch was one of my favorite things. It made batters feel like they didn't know where they were going, what was happening. But in terms of a knuckleball, what you want to do is you want to wait on it and then be reflexive. You don't want to actually start the motion of hitting right away because actually it's going to get you out of place. And right now there's a lot of unknowns. We really don't know where, what policies are going to be introduced, how they're going to be implemented, you hear Powell yesterday really talking to this, saying, look, we can't adjust policy yet. We don't even know what's coming. Mm-hmm. And so for us, the biggest thing has been about batting average. And we've been overweight the U.S., we've been overweight quality, and we continue to hold that as a high conviction. The economy is roaring coming into this. It's likely to hold up pretty well relative to the rest of the world. That's our favorite place.
Perform in the meeting, how you and Emily Rowland come up with this. Emily has been absolutely sick, dead on. Is it what you got right or what you avoided not screwing up? Which one mattered?
I think it's both. I mean, the getting right was the quality call on the U.S. saying, look, this is the best earnings, this is the best ROE, this is the best balance sheets in the world. We got that, but it wasn't chasing the hot dot every time. There's been junk rallies in small caps. There's been junk rallies outside the United States, and we just never changed our view for a quick buck or a quick tactical trade. Mm-hmm. We've been more strategic in this. We've gotten this right over the last couple of years. And what we're looking at next in the next couple of quarters is probably the bond market and saying, look, these yields have backed up. There's some really good income opportunities being presented today. That's something we're going to be gravitating towards. But for now, we're holding that high quality U.S. exposure.
One of the narratives that's gained some momentum here since the election is inflation. Could be coming back How do you guys think about that?
Yeah, so if you look at consumer surveys, you look at business surveys, everyone, the public enemy number one has been inflation. And, you know, as it relates to the macro backdrop, we were starting to get progress, but it's stagnated. It hasn't been coming down as much as we'd like to see. We have three key things that we think are going to develop in the next year that are going to cause inflation to come down. One is oil prices. I mean, we're just talking about Alex Steele's probably watching the oil market. Oil prices here dropping below 70. We're going to get more oil supply probably. That's going to weigh on inflation because it's going to be lower gas prices. We've got housing market that's seeing increased supply. Mortgage rates are up. The bond market is doing the Fed's job right now. It is pushing the 10-year up. That's going to increase mortgage rates. That's going to weigh on inflation and growth. And then wage growth is decelerating. The quit rate is coming down. Job openings are coming down. So we think disinflation is coming back into 2025, regardless of what's happening. And we want to make sure we grab some high-quality bonds while we still got the yields to provide that income.
All right, Matt, thank you so much for joining us. Really appreciate it. Matt Miskin, he's over there at our good friends at State Street, Tom. Coming up, we're going to have a pretty interesting conversation with Mr. Michael McKee.
It's going to be interesting to say the least. Matt Miskin, thank you so much, with Emily Rowland over at John Hancock today. I think this interview was just, you know, folks, okay, another interview with the Fed president, Neil Kashkari, with us the other day, Matt. But it came very complex yesterday with Jerome Powell dealing with some really intense. Why isn't Rand Powell in the Fed meeting? Why isn't she in the press conference?
I don't know.
I guess she's too large to do that, but they ought to get Catherine in there. There was some real news out of that, and it moved the markets. And Paul mentioned a headline out here earlier this morning, I'm going to say within the last 90 minutes, where, you know, the December meeting now is on the edge of mystery, which makes for good entertainment, but what does it mean forward? And I really, Paul, all the interviews we've pieced together today here at the Boston Fed has been uncertainty. People really don't know what's driving forward, and we'll have to see on that as well. Again, to me, and a little inside baseball, the inflation-adjusted yield, the real yield, spikes up off of the election and has broken through and moves near 2%. I don't have that number in front of me right now, but it's nevertheless elevated, and that really impinges upon business and folds into the financial system. There are going to be some close questioning here of Mr. McKee with Susan Collins. Let me tell you a little bit about here. The roar you heard when she was selected by the Boston Fed was far and wide. She is out of Michigan, essentially. Her academics, Harvard and MIT, but far more, her academic work at the University of Michigan was legendary. She really did an immense amount there as a Gramlich professor. Can't say enough about the public institution at Ann Arbor. They minted Claudia Sahm, among others, as well. But as an academic and with an academic process, she brings prodigious economics in real time to the Boston Fed. Now, our Michael McKee, an important conversation with the president of the Boston Fed, Susan Collins.
Bloomberg TV viewers and Bloomberg radio listeners around the world, I'm Michael McKee, the international economics and policy correspondent for Bloomberg, and we are at the Boston Federal Reserve Bank today. They're holding their 68th annual economics conference, and we're joined by the president of the Boston Fed, Susan Collins. Thank you very much for being with us today.
Delighted to be here. Thanks for being at the Boston Fed.
It's great. We tell everybody it's a beautiful day, but it's 39 degrees, so winter has finally hit here.
Seasons are wonderful.
So speaking of winter, December 18th, you have another Fed meeting. And at this point, there seem to be some questions about whether or not the Fed will be cutting rates again, because this week we got some firm inflation news. Retail sales were okay, but not particularly strong. At this point, are you thinking that we should see a cut, or is it better to pause and wait?
So I think it's important to say there's no preset path. I do see rates as still in the restrictive range, which means that over time some amount of easing will be appropriate. But, you know, the economy's in a very good place right now. And inflation's coming back down to target. The labor markets are healthy. We're seeing solid growth. The goal of policy is really to sustain that healthy set of conditions, recognizing, you know, there are risks on both sides. And so I think we're well positioned. I certainly wouldn't take another ease in December off the table. But again, we're not on a preset path. And so we'll have to look carefully at the data and see what makes sense when we get to December 18th.
Well, the data this week showed inflation a little bit stronger than it had been in the CPI and the PPI, and those who do the nerdy calculations for the PCE say we're going to see the same thing. Should you keep your foot on the brake a little more then, because inflation is not back down to your target?
So, you know, I don't focus too much on any one data point. I think it's really important to look holistically. And when I do that, what I see is that, first of all, inflation has come down significantly. I focus on the, a couple of month averages. And if you take food, energy, and in particular shelter out, the rest of inflation has actually been in the range consistent with the 2%, exactly what we'd like to see. What's really still elevated is shelter, and that is taking time to come back down, and a lot of that really reflects shocks from the past. I'm not seeing evidence of new price pressures, and so I think it's important to stay the course, but that analysis of the data is part of why I thought it was really appropriate for us to begin easing in September and to be in an environment where we are really looking over time methodically, perhaps patiently, to be normalizing policy, to maintain those healthy conditions that I talked about a moment ago.
Well, let's look at the other side of the mandate, employment. We had a very strong employment report, and then we had a very weak employment report, granted affected by hurricanes and strikes. So what's your judgment of where the labor market is when you look holistically at all of the labor data?
So again, when I look at all of the data, and you're absolutely right, there have been some stronger readings, there have been some readings over time that were a bit weaker, and there are a lot of special factors. So looking at averages over time, looking at the range of information, what I see is a labor market that looks similar to conditions that we've considered full employment. So in terms of job openings and quit rates and the fact that wage growth has been coming down, and given the high productivity we've seen is consistent with the move back down to 2% inflation and staying there. And unemployment has stayed in a range that is near 4%, low by historical.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed. I will never keep my ideas to myself again after learning this. Hi there, visionary entrepreneur. Do you have an innovative idea that's ready to revolutionize the world? Now's your chance to turn that vision into reality. We're offering you the unique opportunity to pitch your idea directly to investors who are eager to fund the next big thing. All you need to do is create a short video showcasing your concept, your passion, and your potential. Send us your video and we'll broadcast it on our media channel, reaching investors who are specifically looking for groundbreaking ideas like yours. Remember, it's crucial to include your contact details so investors can reach out to you directly. Don't let your brilliant idea gather dust. Seize this opportunity to get noticed, gain funding, and make your entrepreneurial dreams come true. Pitch your idea today and watch your future unfold. Click the link in the description to get started. Your big break is just one video away. Don't wait. Take action now.
They can, And again, we would have to see if there are tariffs that are implemented, more about the specifics and the dynamics for those.
Now, if there's a fiscal impulse in whatever the president-elect chooses to do, is the economy growing too fast for that right now? Would that be a danger, a worry?
So again, I think there are lots of things that determine how the economy evolves and grows over time. Fiscal policy is certainly one of them, and certainly does have an impact on that, and we'd have to factor that in and look through that. You know, I do think, and Chair Powell has also said this, that fiscal policy at the moment is on a path that's not sustainable. But again, when we make our policy decisions to focus on our mandate from Congress, it's really based on the data that we have available and the analyses and the assessments that we can do on that basis.
As far as I know, President-elect Trump has never threatened to fire you, but I wanted to ask, what is, in your mind, the relationship between the Federal Reserve and the executive branch?
So what I would say is that the Fed is structured by Congress as an independent body, and that is important in terms of the ability for us to do our job well. There's a lot of analysis that shows that independent central banks are more effective at keeping inflation low and stable. And we have really seen how important it is to keep inflation low and stable in terms of the impact the higher prices past inflation have had. And so, you know, I think that is a very good structure to enable us to do our jobs well.
So the things that come across social media are basically just noise in the background to you as a policymaker.
I am very focused on doing my job, and there is more than enough to keep me very focused and very busy.
Now, the people you can't see them. I can see them out there, all the traders on their knees going, tell us when you're going to do this sort of thing. Can we basically say, because of the potential changes that are coming and the data that we have seen, that the dot plot for 2025 and the SEP for 2025, those are kind of out the window now, and we should really wait until December or even later to get a good idea of where you think you're going to be and the economy is going to be?
Things, I think, always evolve, and so in about a month or so, we will have a new SEP and information from all of the policymakers about what they think. And so I think it's always true that, you know, in the middle of the SEP information, you don't want to take too much from what might have been written down, penciled in, I would say, a number of weeks earlier. A lot of the data evolves.
What are the people in these tall buildings around us, all the corporate leaders in your district, telling you about how they see the economy going forward and their plans?
Yeah, and I appreciate you asking about that. I think one of the really important things that I do, that my colleagues do, is talk to people across the economy in lots of different sectors. So being out and about throughout New England. And what I'm hearing is pretty consistent with what I said at the outset, that people are cautiously optimistic. They see an economy that seems resilient. Labor markets have moved into much more normal conditions relative to the kind of unsustainable, more overheated conditions from a year or more ago. And the price pressures really have abated considerably. So that's all very consistent. But of course, you know, the aggregate data masks a range of different specifics across individual firms and sectors and regions. And it's really, I think, helpful to hear all of that and pull the qualitative information together with the statistics.
One last question at your conference. It's on financial technology this year, and the Boston Fed's been in the middle of financial technology. Yes. And just coincidentally, coming up at the top of the hour, we have our Bloomberg Technology Show. Okay. So let me ask you, a lot of tech talk over the last 5, 6, 7 years has been tech talk. How fast are we going to see some sort of impact on the average person from new payment systems? I realize you have FedNow in place, but how fast are people going to say, hey, this is something different? And are we going to see any kind of digital currency adoption, whether it's private or government, in the next few years?
So, the impacts of technology have many, many dimensions, and I think we're already seeing some impacts in terms of the roles that fintech are playing across our economy in different ways. And the conference today and tomorrow is intended to really bring experts together who have knowledge and done analysis from different vantage points to see, as we put together the things we know, what are some of the things we don't know and need to know better. And so what we're really focusing on is a number of different themes, including financial inclusion. What are some of the implications of the innovations for access to financial services? And then also, what are some of the implications of technological innovation for the transmission of monetary policy, for our supervision and regulation of financial institutions, and also for financial stability? So thinking about both the opportunities and the risks. And I think we are already seeing some of those implications, but it's still unfolding, it's complicated, and it's moving pretty quickly. So that's what we're trying to better understand. And again, we're delighted that you're all here while we're in the midst of a conference on an important topic.
Well, thank you for having us, Susan Collins, the president of the Federal Reserve Bank of Boston. We'll send it back to you now.
All right, Michael McKee, thank you very much. Bloomberg's Michael McKee speaking with Boston Fed President Susan Collins here in Boston. Tom, I think what I heard President Collins saying, they are not taking possible rate cut off the table in December. That's still there, so a little bit of a clarification there. And I think she resisted the possibility of speculating on what policies may be changing with the new administration. I don't think she wants to stay away from speculation there.
Yeah, Dow's down 300 points. It's her fault.
Exactly.
I look at it, folks, and really one of the messages that we've seen here since 7 a.m. this morning is uncertainty.
Yep.
The uncertainty. But McKee had that. I can't even make the questions up that McKee makes up. He had some brainy question about the dot plot, and Mike knows how much I detest the dot plot. And the answer is nobody knows where to put the dots.
No.
Into 2025. And so the uncertainty here, after the certainty of that election, Republican, is a really interesting mix into the end of the year, the December meeting, and then beyond.
Yep, absolutely, Tom. So some good comments from Susan Collins. Right now, let's get a reset here, Tom. Let's go to Lisa Mateo, get a Bloomberg Business Flash in New York.
You got it. And from the Bloomberg Interactive Broker Studio. Stocks retreating. The post-election rally stalling. Investors anticipating a slower pace of the Federal Reserve's rate cuts. Now, Boston Fed President Susan Collins just telling our Michael McKee that she would not take a December ease off the table. So we'll start with the S&P 500 extending declines after hitting another record high earlier in the week. It's now down about 1%, 69 points. The Dow down 0.7%, 304 points. The NASDAQ down more than 1%, 362 points. We have the two-year yield, 4.33%. That's down 1 basis point. The yield on the 10-year, 4.47%, and that's up 3 basis points. To currencies, the dollar broke its 5-day winning streak. We have the Bloomberg Dollar Spot Index down about 0.1%. We have the Japanese yen stronger, euro, British pound weaker. We have Bitcoin right now a little bit lower, but at 88,000. Shares of semiconductor capital equipment company Applied Materials, their shares down 8%. It gave an outlook that raised concerns over chip spending. And then on the flip side, you have shares of AI software maker Palantir. They're on the rise, up 7%, after it said it was transferring its stock listing to NASDAQ from the New York Stock Exchange. And finally, Alibaba ADRs, they're lower. They reported a profit beat, but revenue came in below estimates, so their ADRs down 3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Tom.
All right, Lisa Mateo, thank you so much. We appreciate it. Tom McKee, Paul Sweeney, we're live here. Paul Sweeney, live here in Boston. We are at the Boston Federal Reserve Bank. The Future of Finance, that's the conference here, Tom. And I think what we've heard, I think you summarized it perfectly, this level of uncertainty, whether we're talking to an academic who's writing research papers on where this economy is going, or whether you talk to our practitioners who are in the market, trying to buy and sell securities and invest for the longer term. A little bit of uncertainty as it relates to trade policy, economic policy, immigration policy. Things have changed in the last 8-9 days, and I think the market's trying to figure out what that all means.
And one thing that we have not heard here in Boston, folks, and it comes up on the show constantly here in this special edition of Bloomberg Surveillance, is, are we beyond the pandemic? And I'm just going to go to anecdotal here. In Boston, I think I got less work from home than I got in New York, totally unscientific. I'm making it up. But the answer is, three economists just off camera here just look back at me and goes, you don't know what you're talking about.
Exactly. So I'll tell you, my anecdotal evidence, Tom, I think drives with you. The airport was packed. The traffic getting, now granted it was rush hour getting into Boston, absolutely packed, just like the good old days that I remember.
Yeah.
And then the rest, we went out for a couple of adult beverages last night.
No.
Good Irish pub.
I was in bed
packed.
at 6 p.m.
Went out to dinner, packed. So
right.
At least here in Boston, and it felt, what I remember about Boston downtown is just the streets really crowded because everybody's going meeting to meeting to meeting in different buildings, and the buildings are so tightly packed together. That's how you do business here, and that's what I saw yesterday.
Reuters, in the I guess this morning I should say. This is Gabriella Mello over at Reuters. J.P. Morgan weighs London HQ options. They may put up a Park Avenue tower at Canary Wharf.
Interesting.
They may upgrade 25 Bank. They say Bank over
Street,
there.
Yep.
They're very Bank. Or relocating. But, I mean, that's the sort of the fervor that's out there right now. And I noticed in the market off a little bit today that Fortress Diamond moves higher. So
yeah, absolutely. I mean, I remember my memories pre-pandemic for London were just construction cranes everywhere.
Yeah.
In the city, at Canary Wharf, all over the place. Obviously, that changed with the pandemic, but it's interesting. I think this Boston market feels very vibrant downtown.
And again, it comes down to nominal GDP. Part of the uncertainty that we're talking about, folks, here is taking in that inflation dynamic that Mike McKee was talking to President Collins about, and also looking at the real economy dynamic as well. And I think it's very safe to say, everything done, that the key mystery here is with or nominal GDP. And what we're hearing from David Gura and others is everybody's modeling out some form of path of Trump second term. Yep. And the answer is the pros are saying don't model it out, including Jerome Powell.
Take your time here.
Take your time, wait for the plan, wait, and see about power in Washington.
See about power. I think probably when you talk to some of these political folks, they say, pay attention to these appointments and let's see what the Congress wants to do, the Senate wants to do in terms of confirmation, what gets done, what doesn't get done. Does anybody have to moderate kind of their outlook here going forward? So I think what we've seen in the market since the election obviously was a risk-on attitude in the marketplace. That much is clear. Just take a look at Bitcoin, take a look at the equity markets, take a look at the bond market, take a look at the U.S. dollar, Tom. And the question is just a little bit of a pullback here today, which seems pretty darn healthy to me. But again, every day I think there will be more information for this market to discount.
One thing on the screen on the Bloomberg Launchpad, not switching trend, gold.
Yes.
Further souther.
Yep.
We got to get Gartman on.
Gartman on.
Did Gartman sell everything there at 10 p.m. election night?
He peaked it out probably. Yeah. So good for him. All right, so we're going to have more coming up here. Tom, we're going to Michael McKee darken the door. He goes from interviewing Susan Collins and coming down to our studio to give us a few minutes.
Getting an
break
upgrade.
It down. Yeah, get a little debrief.
It's like an upgrade.
Yeah, we'll get a little debrief. So Michael McKee's going to join us here. Just looking at the markets, the S&P is off 1%. The NASDAQ is off 1.9%. The NASDAQ 100 off about 2%. Russell, the small capper's doing a little bit better, off 1.2%. Yields, 10-year Treasury yield up 3 basis points, 4.46% here. The 2-year 4.31%. So we're going to have more coming up. The dollar index, as you would expect, is higher. We're going to have more coming up from Boston. This is Bloomberg. Good morning.
Welcome back to a special edition of Bloomberg Surveillance from Bloomberg Radio.
Oh, how about that, Tom? We got some special little slick. Tom Keene, Paul Sweeney, we are live up here in Boston, Federal Reserve Bank of Boston. We spent 4 hours, lovely hours here this morning. The Futures of Finance conference, some smart people talking about the futures of finance and economics, and we grabbed a few of them over the last 4 hours, and we appreciate their availability. Michael McKee joins us right here. Michael, you were just talking to Susan Collins, Boston Fed president. I noticed, I was looking at some of the Bloomberg reporting, she did not take the December hike off the table, but I guess they're going to wait and see, number one. Yeah. And number two, I think she very smartly and very adroitly parried your questions about potential future changes in economic policy that may be coming from this government.
Well, that's the hard part about being a Fed official in this interregnum between administrations, because everybody wants the Fed to come out and say bad things about Donald Trump since he said bad things about the Fed. And they're all being very circumspect and saying we can't make policy based on things that haven't been enacted yet. We don't know exactly what the Trump administration policies are going to be. And so we're going to, we're not going to factor that into our decision making for December at least.
Oh, wise one. I went back and looked, and in 1934, in the heart of the Depression, folks, the first round of the Depression, it got worse in 37. Mike McKay, the Treasury Secretary, was a member of the Fed. And the first legislation in 35 said no. And then there's a tip point with Truman in 51, and you know the history of McChesney Martin and LBJ and Vietnam and the rest. There's a heritage there of the Treasury Secretary being with the Fed. Does that precedence matter? Is it like a judicial thing where President-elect Trump can say 1934?
He could, but that has passed so much into history that I don't think it really carries any weight anymore. Ever since the Treasury-Fed Accord in the early 50s, they agreed to split the responsibilities, that the monetary would no longer support the fiscal. And it's become so ingrained in our system of government that it really... nobody sees us going back to something like that. And even the people on Capitol Hill, most of them think that the Fed should be independent.
The romance of this when we were younger is it was simple, Paul. There were hawks and doves. Are we ever going to get back to that simplicity?
I suppose it's possible if this is if the new normal now is the old normal, and we live in a world of elevated interest rates, then the amount by which you raise or lower interest rates becomes much more important. When you're at the zero bound, and your question is going to be, how long are you at the zero bound, or are you going to move rates by 25 basis points and stop? It really doesn't matter. Hawk and dove becomes a very amorphous concept.
It's a great bar. It's 2 bars down from J.J. Foley's.
If you in Washington D.C., if you look at where most of the members of the Fed are, they would say, well, essentially we're hawks because it's our job to keep inflation down. So we start from that position. Now, there are people who, when you have an inflationary outbreak over the last 2 years, who were much more concerned about how high inflation was getting and thought they should move sooner. So maybe that's the distinction. When there's an issue, a wide enough gap in either the inflation rate or in the Fed rate, you're going to have people who are stronger or weaker in terms of how much movement they want the Fed to do. But all in all, hawk and dove is kind of not a reliable term anymore.
You know, we've seen, it was Tom and I have heard this morning talking to our guests here, a renewed concern about inflation maybe ticking back up. If you think about some of these new policies being...
Is this the best time ever to be starting a technology company?
Let's at least say it's the best time yet. Hopefully there'll be even better times in the future. I sort of think with each successive major technological revolution, you've been able to do more than you could before. And I would expect the companies to be more amazing and impactful and everything else. So yeah, I think it's the best time yet. Big companies have the edge when things are like moving slowly and not that dynamic. And then when something like this or mobile or the internet or the semiconductor revolution happens, or probably like back in the days of the Industrial Revolution, that was when upstarts have their edge. So yeah, this is like, and it's been a while since we've had one of these, so this is like pretty exciting.
In the essay, you actually say a really big thing, which is ASI, superintelligence, is actually thousands of days away.
Maybe. I mean, that's our hope, our guess, whatever. But that's a very wild statement.
Yeah. Tell us about it. I mean, that's big. That is really big.
I can see a path where the work we are doing just keeps compounding, and the rate of progress we've made over the last 3 years continues for the next 3 or 6 or 9 or whatever. 9 years would be like 3,500 days or whatever. If we can keep this rate of improvement or even increase it, like that system will be quite capable of doing a lot of things. I think already, even a system like O1 is capable of doing like quite a lot of things from just like a raw cognitive IQ on a closed-end, well-defined task in a certain area. I'm like, O1 is like a very smart thing. And I think we're nowhere near the limit of progress.
I mean, that was an architecture shift that sort of unlocked a lot. And what I'm sort of hearing is that these things are going to compound.
We could hit some like unexpected wall, or we could be missing something, but it looks to us like there's a lot of compounding in front of us still to happen.
I mean, this essay is probably the most techno-optimist of almost anything I've seen out there. Some of the things we get to look forward to, fixing the climate, establishing a space colony, the discovery of all of physics, near limitless intelligence, and abundant energy.
I do think all of those things, and probably a lot more we can't even imagine, are maybe not that far away. And I think it's like tremendously exciting that we can talk about this even semi-seriously now. One of the things that I always have loved most about YC is it encourages slightly implausible degrees of techno-optimism and just a belief that like, you can figure this out. And, in a world that I think is like sort of consistently telling people, this is not going to work, you can't do this thing, you can't do that. I think the kind of early PG spirit of just encouraging founders to like think a little bit bigger. It is a special thing in the world.
Cyclical business.